Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing up to 90% and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 10% off, you can use code A1T10. Again, that will be a 10% discount off of any of their trials you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show. Hey guys. All right. Good morning, everybody. Welcome back. Happy Thursday to you. Hope you're doing well. We've got just about, well, we're right on time, I suppose. I mean, we're 15 minutes late. I apologize for being late today. Forex Factory, pull this up. We got preliminary GDP numbers dropping in 30 seconds. We'll see if it moves the market at all. Preliminary GDP is sometimes market moving, not always. We'll see if it does. We've got stocks kind of slightly off of their lows here. Gold down here this morning, Bitcoin off of its lows as well. With just 15 seconds to go, we can go ahead and roll our breaking news. All right, let's see if we get any major reaction to preliminary GDP numbers. All right. Initially, not too much of a move here so far. Let's just take a quick look and see if those numbers came out. Durable goods came in a little bit strong. Preliminary GDP came in at expectations at 2.3%. Unemployment claims coming in also a little bit high. So a little bit of slight weakness on the unemployment claims data. Preliminary GDP coming in as expected. Overall, pretty muted response. No large moves to really spot out at this time. GDP numbers, again, like I said, coming in at 2.3%. Preliminary GDP price index a little bit hot, though, interestingly enough. Stocks pretty unchanged. Gold unchanged. Bitcoin, no real movements there. Again, that's the thing with news events. Sometimes they give you huge moves. Sometimes they give you nothing. We'll see what if there's any follow through here. Speaking of follow through, I want to talk a little bit about what we saw yesterday from NVIDIA, which was, I talked about yesterday in my content, a really key player to the story. And the only winner yesterday really were the market makers for NVIDIA because, oh my goodness, in the options market, the premium that you have to pay to buy calls and puts on specific stocks can give you an idea of the options market expected move. And the expected move for NVIDIA was like plus or minus 10%. So there was a forecast of 10% move in either direction on NVIDIA's earnings. And what you can see today, guys, is when I say the market maker was the only winner, you can see the stock is up 2.35% in pre-market trading with just an hour to go. Now, why do I say the market maker was the winner in this scenario? Well, think about it. If you bought calls, the stock went up, right? So calls, you want the stock to go up, but it only went up 2%. So your option is going to be super worthless now because now, the big catalyst is behind you. And there's not likely going to be a move. If you bought puts on NVIDIA, betting that the stock would drop on earnings, what happened? Well, it didn't drop. It actually went up and it didn't move very far. So the implied volatility, right? This is options 101. And I am an options trader, so I love to discuss this stuff. I know it's not the most popular stuff on my channel, but this is really actually quite important for just general trading knowledge. There was a big expected move for NVIDIA. It didn't give you a big expected move in either ways. So the market makers who sold puts and sold calls on the event made the most money. And I got to pat myself on the back here because I sold both. I sold puts and calls. I sold a call at 150. So that call is going to be very worthless now, which is good for me because I shorted calls and I also shorted puts. I have 110 puts and 150 calls. So both of those, the 110s and the 150s options that I sold, I quote unquote played the market maker by shorting or selling those puts. Both of those are going to pretty much expire worthless almost certainly. And what that means is that if it expires worthless, it means that, again, I don't have to do anything as the option seller. I just get paid. I collect that premium as the market maker. People love to think market maker is some ominous term for somebody who is up in an ivory tower and trading against retail trading stop losses, and that is exactly not the case. The options market allows anybody to actually play market maker to an extent because you can actually sell calls and sell puts to other traders, which is exactly what we did on NVIDIA. So we had an earnings play on NVIDIA. So NVIDIA going nowhere is the perfect scenario for market makers. When you're selling options, you want stocks to not move at all. So just wanted to go through that. It's a kind of a fun concept. Earnings events, especially on stocks that I wouldn't mind owning shares in, are something that I like to play. And NVIDIA, I had, like I said, I had 110 puts that I sold on the DeepSeek Monday. The big drop in the stock, I actually sold 110 puts. And with the market kind of, or the stock market itself kind of bouncing a little bit, but NVIDIA specifically having a bounce from those lows, those puts are likely to expire worthless. At the same time, I sold the 150 calls, and those are also likely to expire worthless with little time to go. So if I could speak, essentially, I played market maker. Can I show you guys something a little exciting that I'm working on behind the scenes? Can I show you a little secretive project I've got going on? I'm not good at keeping secrets. So if you'd like me to show you the secret, just type yes, and I'll show you a secret this morning. I worked on it. Here's the problem with me. I love what I do so much that when I get home, I'm like, okay, let's sit down, let's have a relaxing evening. And then an idea pops in my head and I work on it until 11 p.m. It's a blessing and a curse. My brain doesn't shut off with this stuff. And I love what I do, so I'm fortunate. But I want to show you guys something. Also, just quick update on the silver trade. Not a whole lot of action. Stock market, my goodness, man, has been just a whipsaw kind of event. Okay, I'll show you guys the secret. Ready? The secret is I am working on, it's not ready yet, so please don't DM me or message us on our website about this yet. It's not ready. We're working on a better way to more thoroughly track the positions held inside of the VIP room. We have a lot of different things that we trade. We trade stocks, options, indices, Forex, bonds. We trade everything. And what I've come to realize is that our members would greatly benefit from a dashboard that would allow them to more thoroughly track the positioning of traders inside of the A1 trading group. It's not ready yet. It's not fully functional. I'm working on it. We're going to get the team on it. But I think that might actually be a serious value add. So for those of you who are members who watch these live streams, that is coming. I think that there's already been a good bit of a response to it. If that seems like something, can you guys just help me out? If that's a good idea, if you think I should invest 100 hours into this thing in the next few weeks, type yes in the chat. Like if you think that's a good idea, I would also, of course, show it periodically on streams and videos for the people who are not, already a member of our VIP. But I don't know. I feel like that's something that here's the thing. A lot of people who pay for services and things like that, the feedback that we've gotten is, okay, it's great, but I don't have all the time in the world to stare at, trade alerts being sent. It would be cool if I could just get kind of an updated dashboard to see the positioning. Okay, there's good feedback. Thank you guys for that. I throw my ideas at you guys just to see what the audience says pretty often, and I appreciate the feedback that you give. Yeah, I think I will continue to pursue that then. If the community wants it, that is how I have kind of run the operation for the last, since inception. A1 Trading is and always has been like what the people want is what I try to build. So hopefully I will continue to be able to put together some value for existing members. That should be a lot of fun. I think a dashboard to track positioning would be better. Nick's master plan. The master plan, what the big secret to making things more successful, what I found over time is just do what people want. Help people. If you help people, it comes back tenfold. That's the lesson I've learned in business, right? You don't have to cheat people or lie to people or scam people. It's amazing. In the trading space, there's so much scamminess and fraud and fake profits and demo trading. But what I've actually found is that the more transparent, more honest, more real I get, the better we do as an operation. Because people, I think, are tired of the fake, nonsense. And we attract, proudly at A1 Trading, I think we attract people who watch these shows, people who join our groups, join our telegrams. I think we attract a little bit higher caliber of a trader. So that is a compliment to everybody in this room. I don't think we attract the same, Lambo, get rich quick stuff type of crowd. And I'm really proud of that. I think we've got a pretty awesome community, and I appreciate you guys. Okay, let's keep going. Let's get into some markets. Stock market opens up, like I said, in about 50 minutes. We've got stocks here breaking, I guess, their 4-day losing streak. 1, 2, 3, 4, and kind of bounced yesterday. But we've been seeing this, so let's be careful with this, right? You've been seeing this bounce back, as you often do in the process of a market pulling back. You often see like an intraday spike that gets met with selling pressure. I think if you're a bear on this market, you've got to take a close look at where this candle is right now and watch how it closes today. If you are somebody who thinks, I think indices are going to move lower here, what you definitely want to see is this get faded like we saw yesterday and 2 days before that. So yesterday you had the kind of start to the day pump. Market sold off, kind of ended up back in the positive due to NVIDIA kind of rallying the market just a bit. But this is the type of candle that if you're a bear, you're looking for. You're looking for these attempts to move higher to be met with selling pressure, right? So if we're going to go back and test lower lows, like we're going to go test this 5840 on S&P, right? This is the kind of price action you'd want to see. You'd want to see failure at these levels. If you're somebody who is, let's take a look at the dollar. We could do the same story. What are you looking for? Well, if you are bearish on the dollar, we're getting a little bit of an uptick in the US dollar coming back to test this area here. Sellers want to see that area. It's fine for a market to move back and test areas, but you want to see if you're someone who follows price closely, you want to see those areas be adamantly held by sellers, right? That's if you're a dollar bear. Obviously, if you're a dollar bull, you want that level to break out and leave it right behind. You know what actually looks impressively bullish right now? You ready? On the currency front, the British pound looks quite strong. Take a look at British pound. You had this long-term downward trend. Could not get out of its own way. Sellers just dominated this chart. Look at what we saw here. Downward trend was broken late January of this year, January 24th. Bulls took the reins, pushed this thing higher, hit resistance, chopped around here a little bit, but then were able to more decisively break out to the upside or above that 1.25 level. If the pound drops back into 1.25, I'd be curious to see if there is more buying pressure that comes to meet that pullback. But yeah, I think the pound is interesting right now. And you have something on the watch list here. Let's just do, actually, we'll do only major currency pairs and minor currency pairs. Look at the top of the leaderboard here. You have British pound taking the lead across most currencies: pound dollar, pound Swiss, pound Aussie, pound Kiwi, pound CAD. Bullish readings. Very interesting. Pound CAD getting a +8. Off-main mentions, check out the pound CAD. It's getting a more bullish reading. Let's go look at the chart. Pound CAD, we'll pull it up. Coming up to test this really long-term level of resistance. This has been a tough general area going back through most of last year. Pound CAD. You know what? This is an interesting, unique, very specific FX play right now. On a fundamental note, US, unless I'm not following it closely enough, Trump has not been particularly specific on what he intends to do with the UK in terms of tariff stuff. But he reaffirmed yesterday, April 2nd is the date that I believe he is planning to impose those tariffs, to put into place the tariffs on Canada and Mexico. So the CAD now has that to worry with. I think that's part of the reason you're seeing things like dollar CAD up today. You're seeing some CAD weakness getting mixed in here. So pound CAD specifically, let's see if you get that breakout. That could be an interesting one. But again, showing up on the Edge Finder, you've got some stories playing out in the geopolitics world, the tariff stuff. But pound seems to be, at least right now, seems to be a winner. So I like the pound dollar specifically. I've been leaning a little bit more bearish on the dollar, losing that kind of unbeatable all blue U.S. economic heat map that we've discussed. No longer there, starting to get really red. It's part of the reason why I am bullish yen, bullish TLT, cautious to bearish on the US dollar, cautious on stocks, bullish on metals. That is pretty much, you can always kind of find out what I am leaning into based on the economic heat map and the top setups page. That is pretty much always where my bias is going to fall. If you guys would like to try out the Edge Finder, here's how you can do so. We'll drop a link here in the chat to where you can apply for a 30-day trial to the Edge Finder. If that's something that you're interested in, click the link being dropped in the chat right now as we speak. And I have one other thing to mention to you before we go to our technical setups with Miko and Marco in just a second. Make sure to also join our Telegram channel. If you have not joined our Telegram, it's completely free to join. And we are doing a giveaway this week for the Edge Finder. So if you'd like a chance to win the Edge Finder, all you have to do is join the Telegram channel, and there will be a link shared shortly to put your name and into the hat for a chance to win a free copy of the Edge Finder and use all the tools that I discuss on my live streams and videos. So join the Telegram. Link's just been dropped in the chat. Like I said, completely free to join. Okay, guys, we're going to be right back after this quick break, and then we're going to be setting up with Miko and Marco to talk about some technical setups. Stay tuned. We often get asked by our US viewers, how do you guys trade gold and indices on a regulated broker? To trade gold, indices, and more, we trade using Webull. And for US citizens watching now, for a limited time, you can get free stocks if you use our promo link that can be found in the description or dropped in the live chat right now. Webull is our top pick and personal choice when selecting a broker here in the United States for stocks, indices, and commodity trading specifically. Get your free stocks now by clicking the link and signing up using the instructions found there. Now, back to the show. All right, we're back with Miko and Marco. Hey guys, how's it going?
What's up?
Good to see you guys. Have you back for another weekly session where we talk about some technical setups. I usually like to start this just by giving you guys the floor for a second. What is your favorite chart of the day? Maybe Marco, we can go first. What are you watching closest right now?
Well, I think the Aussie and the US dollar actually looks pretty interesting to me, both Aussie pairs. So basically, we have a really nice kind of a descending channel formation right here. And I was looking for a potential reversal. Usually when the price is very correctively breaking the lows like this, you could get a nice uptrend, but current candle is very bearish. So possibly going to flip my bias to bearish. And then on AJ, I was actually in a small buy setup right here. I know it's fundamentally completely against the current narrative, but it was for a small kind of a relief rally because the technicals did look very good. So I was looking for a small rally. Of course, the bigger picture, the home run trades would be to go short. So that is going to be on my radar for pretty much all of the JPY pairs. So for EJ, for AJ, and for NJ, I'm being very, very bearish to look for those home runs. But on the smaller scale, I may be looking for some, let's say, pullbacks or relief rallies on the 1 hour chart where I can get in on a buy setup, grab some quick percentage, and then get out. So if I had to pick, I would say any of the JPY pairs right now, because AU, I had a play to go long. Possibly it's kind of invalidated now. So I'm closely watching the JPY pairs, looking for that bigger narrative to play out. For the edge finder printing, of course, very bearish signals as well. That gives me a great confluence to look for some sell setups. So that's the game plan.
Yeah, yen pairs are interesting. They've been moving quite a bit here recently. I'm wondering, Miko, if your chart of the day has anything with yen in it, or are you looking at dollar crosses? What's your main focus right now?
At the moment, it's USD. I do have quite a few yen pairs which I'm looking at, but that have been a little bit slow on the way down. So I'm waiting for them to pick up the pace. But at the moment, there's a couple USD pairs I like. Pound USD is one of them, and USD CAD as well. Looking for buys on pound USD and sells on dollar CAD. For this one, there's a really nice setup here on the 4 hour chart, which we've been eyeing up since last week. It's just been taking our time to get the pullback I'm after. Really nice resistance, was actually support not long ago as well, and some nice trend line confluence. All I'm looking to do is try and find the next higher low in this sequence. We've seen 1, 2, 3, looking for the fourth. It does look like pound USD could potentially be reversing. It might just be a bigger counter trend, but that bearish trend looks like it has kind of met its match, and now we've been trending to the upside, and it does look like maybe DXY has got a bit more downside to it as well. And dollar CAD likewise too. I'm looking to see if I can catch a low high with this one. Really strong move to the upside, but I'm kind of getting ready to short this. I'm looking more so at the resistance here. This is kind of what we had a couple of weeks ago. We had that big gap and price came back down. I'm looking to see if price can come back and retest that level for potentially a sell. So those two I've got my eyes on at the moment.
It's interesting too. You have just the dynamic here with what was recently said by President Trump about the tariff stuff kind of coming back into play. It's going to be a theme this year, whether traders like it or not. It could be kind of frustrating. You're in a position that all of a sudden, geopolitics get thrown into the mix. But yesterday, Trump specifically mentioned that Canada and Mexico tariffs are still on course for April 2nd. He actually made a specific comment, which I thought was interesting or funny. He said he didn't want to put it on April 1st just because he didn't want to jinx it because it's April Fool's Day. And I was like, this is the leader of the free world here speaking. But anyways, the euro dollar here also seeing a little bit of pressure because Trump mentioned 25% tariffs on EU as well. So there's some serious some forces here at play. Dollar CAD moving with some momentum here to the upside here recently. But as you mentioned, Miko, we'll see if this is kind of one big, we had the top for the year kind of thing, and then we're going to see a larger push lower. We'll see. Dollar CAD's definitely an interesting currency pair. Same with the pound. I was actually mentioning just before you guys joined that the pound pairs look interesting just from a momentum perspective. I think we had the same chart drawn, Miko. Basically, you had some pretty key breakouts here to the upside here recently. If we get pullbacks on that, I'd be curious to see if there is dip buyers that rush in to take advantage of that reversal. Marco, what are your thoughts on the dollar index? Miko talked about it just for a second. I'm curious where you are with the dollar. A lot of our listeners are obviously currency traders or gold traders, and so the middle ground is often the dollar index. What are your thoughts on this?
Yeah, sure. So just before that, I want to mention that EU is completely incompetent because the growth has been around basically zero, and now the tariffs, not the greatest story for the euro, but yeah, the dollar index. Well, on this 1 hour chart, we have now a big breakout to the upside, but on the daily, I would say I'm still not convinced of a major dollar weakness or a major dollar downtrend. We had this huge uptrend right here. And as you keep mentioning in the live streams as well, I mean, dollar is fundamentally kind of not the strongest, but then you need to compare it to the other currencies and basically other economies. And compared to them, dollar is still pretty strong. So I don't really see the technicals being too bearish or the fundamentals. And I just could not make a decision right now. I would need to see more data. Probably need to wait for like March to get some more central bank meetings. Until that happens, I'm definitely not bearish on this chart. I would say I'm actually more bullish because the momentum here that I'm seeing is still smaller than compared to the candles that we had when we went up in the last couple of months. So that is my view.
Yeah, another one of our regular stream hosts, Ivan, has a pretty notable kind of short perspective on the euro dollar. Part of the reason you mentioned, Mark, I mean, you're looking at GDP growth at 0.1%. There's just not a lot of growth, and both in the UK and Europe, the concern I think is actually stagflation. This concept of rising inflation at the same time that you have slow growth. And yeah, I mean, the euro from a price action perspective is interesting. You've got, not the same kind of price action that you have with the pound. The pound has been able to kind of break some of these resistance points. Euro still struggling there, and with clear 25% tariffs potentially coming into the picture. I mean, the European economy, as you mentioned, already kind of slow growth. It's good struggle. So it's an interesting one to keep an eye on. Miko,
Yeah,
same question to you. You talked about the dollar. Oh, sorry, Marco, were you going to say something?
No, that's okay. That's okay. I'll say it later, so that's okay.
Okay. Miko's same question to you. Dollar index or any other US dollar crosses that you're watching. Is the momentum here kind of lost, or do you think this is a bigger theme, a bigger pullback in the context of an uptrend?
Yeah, I'm looking for downside. I'm looking for
Okay.
downside on the dollar. It has been a very slow move, as Mark has mentioned, which makes things a little bit awkward. If this was a bit more forceful to the downside, then I'll be a lot more confident with the bearish bias, which I have for the dollar. But we have kind of broken out of this uptrend, which was the main momentum coming to the end of the year. All that momentum has since lost. And I looked at one point that we were possibly going to continue that, but price kind of fell flat on its face a little bit. So I am looking at some upside for the dollar in maybe the next couple of days or so. But I do expect to see another lower high formed like we did once over there, second time over there, and potentially a third. So that's kind of what I'm looking at for the dollar, some upside for some downside, kind of continuing the correctiveness of this move, like this kind of channel, which again is not really seeing a lot of force. So it may just be a correction for us to later continue to the upside. But my plan at the moment is to try and see if I can catch another one of those lower highs there, which kind of coincides with what I'm looking at with pound USD, which is another move down to potentially catch another higher low and a push to the upside. Likewise with dollar CAD, really big moves to the downside, looking at a correction for potentially a lower high. If price does start to break through some resistance, I won't be so interested in this anymore. And same with Euro USD as well. It's been very, very flat as well, which kind of makes me think that price is getting ready to turn to the upside because we had such a confident bearish trend and now things just become so stale. So it's like price is almost looking like it might be forming a bottom before pushing to the upside, especially when we had this big gap. I thought price was just going to continue, but we formed this trend here. So it's almost like consolidation really for Euro. So even though we might see some momentum, there's really strong support below us. So I can't quite have the expectation that Euro is going to continue until it does. I'm also expecting something like this to happen in the next few days.
Yeah, interesting. Also, guys, I have just a little bit of breaking news here that I have to share with everybody. So Mexico and Canada tariffs on March 4th now. This is news that's hitting the market as we speak. China to also be charged an additional 10% tariff on that date. So interestingly, we are seeing some ramping up of the tariff stuff. Stocks here were in the green, now slightly in the red for the S&P 500. Dow Jones has also flipped red, specifically Russell's back down. Chinese stocks still up a ton, but giving back a little bit of gains here. And then also a comment on U.S. wants reciprocal equal trade with the U.K. as well. So, I mean, this is a theme that we've been seeing continues to roll out. You have more and more tariff news hitting the headlines. You've got euro and pound reacting negatively to this so far. Dollar index seeing a little bit of a move higher on this data point. So just interesting. Dollar index up 0.57% here relative to other currencies. So really interesting. But yeah, that news has the potential. Again, for the last few days, we've been seeing that anytime tariff news comes out, the playbook seems stocks get sold, dollar gets bought. TLT usually moves up. Bonds usually move up in response to that, but they are kind of down on the day here slightly, although we're down more than they are now. So bonds get bought, a little bit of a risk off theme. Yen, last one I want to check before we go back to our next charts. Euro, yen, CAD, yen. Yeah, you can see this is also the playbook. Yen gets strong, TLT gets strong, dollar index gets strong. Gold mixed. Gold's down 1% of the day, but you can see snapping back a little bit on the 30-minute candle here, and stocks get sold. Bitcoin, I'm wondering, we're up 2.3% here for Bitcoin right now. Let's see if those gains can be held, but this has also been a thematic thing. Whenever tariff news hits, down goes Bitcoin. So we'll see if that has some follow through here. So maybe that's your directional kind of catalyst for the day. Speaking of metals, what are you guys' thoughts on this? Marco, gold here pulling back, huge run up. What's your bias here?
Yeah, sure. So just before that, I want to mention about the tariffs, why it's such a problem for Europe, as like Europe loves to sell cars to the US.
Yes.
US loves BMWs, Mercedes, Audis. So, and that's a big market. That's kind of the biggest market for European car makers. Yeah. Huge. And now there's going to be a 25% tariff on those cars. I think that's going to be really, really bad for car manufacturers, and the euro could really go down compared to the dollar. So I can really forecast this thing happening maybe again right here if the tariffs do play out as they're playing out now. So we talked about gold. And for me, gold on this daily chart, looking at the technicals, I'm not bearish at all. I think this is very strong. Gold can have some pullbacks that look like this and still continue crushing higher. So if I was a gold trader, I would not be concerned at all. What I wouldn't like to see is, let's say, 2 consecutive down days on the daily chart, 2 consecutive large bearish candles on the daily chart. Here I'm seeing a bit of a correction, a bit of a pullback. And again, this train is very strong to the upside. There's a lot of momentum behind it. The technicals do look very good. The fundamentals do look great as well. So yeah, just more upside for gold. Silver, a bit more corrective with the technicals. It's not looking as clean or as strong as gold. Big rejection candle, huge wick on the daily chart, getting a little bit of a sell-off, bearish momentum. But for me, the main indicator is gold, and then silver should kind of follow what gold is doing. So I'm pretty much still bullish on both, still bullish on the metals. I think it's a good play for gold traders to be buyers in this market, and this is kind of their time to be active.
Love it. Yeah, thanks for sharing that. And Miko, same question to you. Gold, for the first time in a while, seems like it's having a little bit of a pullback. Is this enough for kind of a leg higher after this, or does it have more room to come down? And I know you typically prefer silver. I as well right now do. I'm curious your thoughts on metals.
So yeah, it's been interesting. I'm still generally speaking very bullish on both of those, gold and silver. However, of course, it's a bit awkward at the moment. There's some support I have paid attention to here on the 4-hour chart, and I'm wondering to see if this can hold or not. If that does break, that would be not necessarily all I'm expecting everything to crash, but I think we could be going for a bit of a pullback as the prior high that we broke through not too long ago. I wonder maybe if we can get a pullback into that area, because gold has been very impressive over the past couple of months or so. So maybe it is due a pullback, but a pullback is what I'll be expecting. So this support really is kind of where my focus is for gold. At the moment, I'll still be bullish, but things are slowing down. So that's kind of what my takeaway is from that. In terms of silver's a bit annoying, to be honest. Kind of stuck at a level of resistance here. It looked like price was breaking through at one point, and I was about to start looking to try and get some break and retest, but then we kind of closed back below, so it's made it a bit awkward. I'm still very much looking for silver to get back to the high here at 34.8, and looking at the overall trend, it's still comfortably to the upside. But if we continue to respect resistance here, it makes the buys a bit difficult for me. Potentially, maybe silver wants to push down first before we push up. Potentially, I'm not really interested in the sells. But if we were to come back above this level more confidently, then yeah, pullbacks will look great, because now I know the next big target, next big level would be that high. And we've got this to potentially position ourselves from. So it's a much safer trade if price is trading above this rather than below. So I'm still, generally speaking, bullish on both. They're just in awkward positions right now for entries.
Yeah, and I know we discussed this last week. Got a lot of attention on the channel when we chatted about this last week. We talked about the gold to silver ratio. I just want to bring it back up because, we all three seem kind of thematically more poised bullish on the metals. The reason I bring that up is I do think that metals have a lot more room to run, kind of based on this chart. The reason I bring this up is because for those of you who are just tuning into the show, maybe you're newer, we talked about this last week when Miko and Marco were on the show, talking about the gold to silver ratio. This shows you how many ounces of silver you need in order to purchase an ounce of gold if you were to change, like swap them over. Right now, you need 90 ounces of silver in order to get 1 ounce of gold. And that is pretty historically high. I mean, it's not like record breaking or anything, but I would say it's generally pretty high. And this thing over the long term kind of trades in a long term range. We're looking at a weekly chart of this gold to silver ratio. The reason I think that the gold and silver market may be entering into a multi-year kind of upward trend, rather than just one kind of big blip last year and now we're going to have a big sell-off. I think that we may have room to follow through because we haven't really seen silver take the lead. I think that when silver really takes the lead and we see the gold to silver ratio trading much lower, then I would start looking for a longer term perhaps downturn in the silver and gold world. But I think that, Miko, you and I have been talking about that preferential kind of silver to gold story. It has more room to catch up. We've been saying it for a while, but eventually it could actually happen, I think. And when you get a true metals run, you would see this chart move lower. Basically, the idea is silver would become more valuable in relation to gold. So we'll see. Just a fun thing to play around with and think about. Indices I mentioned earlier, kind of seeing some volatility here lately, especially with the tariff stuff. Marco, are indices still in an uptrend? S&P, Nasdaq, whatever you want to look at.
Oh, and just a small story. So my girlfriend and I have an anniversary, and I was buying her jewelry, and I was thinking silver or gold. And I looked at the chart, and I saw silver is a better option. So I bought her a silver necklace.
Nice, very nice. Yeah, I mean it's a beautiful physical metal. I actually think silver is quite cool looking.
Cool.
Yeah.
Pretty cool. You can always melt it down and get
Yeah,
some
that's right.
value.
That's true.
And if you have 90 ounces, you can get 1 ounce of gold.
Yeah, that's true. That's true. So you were saying the S&P, right?
Yes.
So the S&P on the daily chart, I think it still looks pretty strong. We do have this very important trend line going here. And from my back testing of the S&P, I did see the S&P respect trend lines. It just likes to move in these sort of channel formations. And we have tapped into it, double wicks and rejected. So the technicals are still pretty strong for the S&P. Although I did expect a bigger rally, a stronger rally here in 2025, I was kind of on the Trump hype train because everyone was saying how Trump is going to pump up the stock market, and I kind of believed it. But of course, it's not down to Trump, it's down to a lot of other factors. But technically, this is still pretty strong, and I would expect more upside until I see some more bearish candles. So the biggest problem for me would be if we see 2 consecutive large down days on the daily chart. I think that could be pretty problematic. I'm not seeing that right now. So yeah, still bullish.
Yeah, no, I think longer term, you've still got an uptrend that's intact. I really don't see issues for the indices unless you really break some of these key levels that we're not too far away from. Miko, same question to you. Indices, are they, at what point do you, I think it's pretty obvious, like long term, they're in some uptrends. Maybe what's a good example of something that looks more threatening to that story? Where do you actually start to say this chart's breaking down a little bit?
Yeah, I would be looking at just previous lows. I mean, with the indices in general, they can still take up major lows and then give you like a big kind of correction. But of course, we would still expect price to form a higher low and continue. But I think for S&P, US 30, and NAS, I'll go to the daily chart and just look at where's the last major low. And for NAS, it would be this area here, 2600. If we break through that, I'll expect a bit of a counter trend to form. If I go to S&P, if we were to break through this low here, that would be a bearish signal for me. I'll be looking at a much bigger counter trend. And for the Dow Jones as well, I'll be looking at least this low here as well. So I want structure to break, support to break. And that would be my indication. But as long as we're above that, I'll still be bullish. Of course, it's just about timing entries and stop losses. But above these daily lows, I'll still be bullish, expecting price to push back to highs and so on and so forth. But if we break through those, then I'm expecting a bit of a counter trend to form.
Cool. Yeah, no, I think that's a good answer. It's dangerous, I think, especially for things like indices and gold, which I've said, many times on this show together with you guys. But this concept of like, okay, these are generally things that appreciate in value. There are times to be bearish or to be very cautious on stocks and gold, but generally you want to find reasons to defend the reasoning for them to go up before you accuse it of being guilty, right? Generally speaking, the value of gold goes up because they print more currency. Generally speaking, stocks go up because companies grow and populations grow and there's more demand for products. Like that is the story long term. Doesn't mean that you can't have a larger scale correction and traders can take advantage of downside, but you just have to be careful with the short side in general. So I think those are good clues to look for. Look for significant breakouts to the downside before you really determine, okay, this market actually may be heading lower for a while. I've mentioned on indices, I'm personally cautious from a fundamental perspective with all the tariff stuff and uncertainties. It's really hard to model out what economies are going to look like next year. So we'll see. But I still like gold because if there's one thing that's certain right now, it's that uncertainty is rising, right? So that lack of certainty, there is certainty in gold, kind of acting as a bit of a alternative or a safe haven. It doesn't mean it has to go up, and that certainty could be raised if there's some resolutions or conflict resolutions, like in Ukraine. Those things can come at any moment that could cause gold to actually lose its factor of safety, but we'll see. Right now, I'm kind of just trading the world that we're living in. There's a lot of uncertainty and a lot of kind of decisions that are on the table that could move markets. Okay, last one that we will focus on today is Bitcoin. Okay, so the last time we spoke about Bitcoin was back up around 100K, just shy of it. Now we've got huge selling coming into crypto. Miko, Marco, what's your grandma saying about it lately? Have you heard anything from her?
No, she's dead quiet. So
Interesting.
that's good. But Bitcoin is just kind of in the dumps right now, unfortunately. Yeah. So it's just on the daily chart, it's not looking healthy at all. This is exactly what I don't want to see, that I was mentioning in this live stream. So we have 3 consecutive down days, pretty big candles as well. Not a good look, not a good story. Today we are slowing down a little bit, but again, we have broken this major support level right here, and we have continued through it. So I would not be surprised if we touch this level, let's say. So yeah, and Ethereum, don't even get me started. That one looks even worse. This is just very, very bad. So Bitcoin looks a bit better, but I'm bearish on both, to be honest. So, but again, possible opportunities to buy. Would I buy right now? I wouldn't personally. I would maybe wait for it to touch some lower levels. So for Bitcoin, if it does, let's say, retest these levels and show some momentum, some strength, I would maybe try to get in on a position for a long-term investment. You would get it at a much cheaper price than 100K. So that would be pretty good.
Yeah, I think I'll ask you guys both of this, but I guess Marco, you could go first with your answer. You know, I think all three of us are like, okay, there may be some utility here long term. Like maybe you buy some when it's really low. But what is, so you kind of answered the question there, what is really low to you? You kind of mentioned maybe down in the very low 70s as a possible area to, would you just buy a big chunk and not look at it anymore, or would you buy dollar cost average, like in terms of like a long
Definitely
term?
dollar cost average.
Yeah,
I think this is not the final level. If we do retouch that level, I don't think it's the final level that is going to break, because Bitcoin, when it retraces, it can retrace for quite a big amount. So we could go even lower. So I think the best approach would be to dollar cost average in with small chunks of money and get in like that, because you never know at which point it will reverse. But I do believe in the very long term, it is going to go up even more.
okay. Fair perspective. Miko, same question to you. Bitcoin, short term and maybe long term, how do you see it?
So yeah, as Marco mentioned, really big break of support here. So I'm expecting more downside, especially because of the force as well. It's not like it just kind of slowly pushed or left a lot of wicks. It was a really strong break. So also looking at the same area on 70K, I think that could be a nice place for a long. Of course, we'll see how we get there, how we react. But I do expect, again, long term, I'm still very bullish on Bitcoin. And, you know, Bitcoin has very steep corrections. So we could drop 30-40%, and that's still relatively normal. So I think in terms of Bitcoin's trajectory, if we to see a meaningful drop to the downside, I'll be expecting us to eventually form that higher low and continue, because 5-10 years, I think there could be a lot of use for Bitcoin. And I like the fact that Bitcoin is still very skeptical in terms of the general population, because it means there's room for it to grow if it does grow. If everyone was just 100% believing in Bitcoin, then there wouldn't be so much value for us to catch up. It's a good thing if everyone did believe in it, but the fact that it's still kind of relatively small, I think there's a lot of potential there as well. So I'm still very long-term bullish. And as we correct, I'll be expecting support to kick in and us to see high prices.
I love that point, Miko. You know, in fundamentals land, we call that having a bear case, right? You want a bear case to be present, because look, when everybody is bullish or when everybody is bearish, you got to start asking how much, you know, if you're somebody and you're looking at this chart and you're saying, you know, I'm buying up here, who's going to buy behind you? You always have to ask, who's going to be the buyer that buys it from me? If I buy Bitcoin at 108,000, who's buying it from me? At this point, everybody is bullish. Donald Trump's going to be the crypto president, all this. Like, it's so hyped. Who's going to buy it from me? Whereas, as you've just mentioned, Miko, if you wait for this longer term, oh, Bitcoin is junk. If you are right in saying, no, there's actually some long-term value there, there's so many skeptics, there's so many haters that will turn and potentially join you if you are right, that it's crazy, right? If long term, yes, there is value there, it's utility, and like if that happens, if it's one big tech utility that we are using 50 years from now, there's so many buyers that could come in behind you. But yeah, sentiment is very powerful. So great points on both fronts here. I will answer from my own perspective. Same kind of idea. Short term, this looks really broken. This chart does not look good. Does not look healthy. Momentum, and it was perfect timing, man. The market is really amazing at doing this. right on the cusp of quote unquote alt season, right? Where everybody was saying, okay, Bitcoin's done it. Next, we're going altcoins. And that's when everybody jumps into crypto. That's the moment it turns. Literally, the high for Bitcoin was on Donald Trump's inauguration day. This is not, blaming Trump for this, but this is the way markets behave. Everybody gets so hyped at the worst moments. So it's really fascinating how markets are a reflection of human psychology in a big way. So we're out of time, guys. Thank you very much for coming on. Everybody in the audience, we got 589 people watching here between all the different places we're streaming. If you guys could do me a big favor today, make sure go follow, go subscribe, go find these guys on their own respective social medias. This show is only as valuable as it is because we have great contributors all around the world playing a role in adding value to the trading day for everybody who's watching. Do us a huge favor. We're going to drop the links to their channels in the chat right now. Here's Miko's, and we'll drop Marco's in just a moment. Take 2 seconds out of your day. Go show them some love. Subscribe to their channels, and let them know you were watching them on the A1 Trading Show. Guys, thank you very much for coming on today.
Thank you.
Appreciate
See you
it.
next week. Goodbye.
See you guys. All right. Always good to have these guys on. Again, big news this week with tariffs, with crypto selling off. I mentioned earlier in the show, just be careful with this concept of, basically, do we get the fade intraday? We saw the fade yesterday. We saw the fade a few days ago, and this is more inherent of a market that is in the process of correcting. A lot of people don't realize that when stocks sell off, it's weird. The price action of stock selling, and this is why I find shorting stocks to be very difficult, is that in short-sided moves for stocks, you get something like this. You get huge drops, violent pops that fade, right? In a true stock market sell-off, you get quick blips up that fade quicker. So this is why it's very hard for me in my trading style to trail stops and trade normally, because these moves are so violent, so quick, and it's very hard to trail a stop on this kind of move because the spike backs are so violent. Stocks and indices have a very unique characteristic in that way. If you catch a short position correctly, my gosh, it just floods P&L into your account. That's why a lot of people get addicted to shorting stocks, is because when it goes crazy to the downside, it's incredible. But be careful with it because they're very volatile intraday. You can see what I'm talking about here. Big drops, spike back up. Will we get the follow through? That's the question of whether or not, kind of true bearishness is in this chart. If you're seeing true bearishness, that's the kind of behavior you get. You get these violent moves down, violent moves up. So we'll see. Anyways, guys, I mentioned this earlier, but we're doing a giveaway here this week for the Edge Finder. If you'd like a chance to join, make sure to join our free Telegram channel. The link is in the chat right now here in just a second. It's also in the description. Join us on Telegram for a chance to win the Edge Finder completely free. We're doing a giveaway throughout this week, and we will announce the winner as well. So we also have free course material in there. We're sharing daily trade ideas, markups, every sort of some fun tweets and chart markups, trade ideas, all sorts of stuff. So make sure you're joining the Telegram if you have not already. Now we're going to take a quick break and set up Forex James to take over the show and talk some FX and latest market moves. Stay tuned.
2025 is here, and to kick off your new year of trading, you can get access to our free A1 Trading Telegram channel. Inside, we share Edge Finder data, free trading courses, market forecasts written by our in-house traders, and free trade ideas on Forex, indices, gold, and more. And if you're more into the stock trading world, we have a whole Telegram channel dedicated to just that. Start your new year off right by joining the A1 Trading Telegram channels completely free. Links can be found in the description and in the live chat. Now, back to the show.
Hello. How is everyone doing? See some familiar faces in here. So I just saw, for anyone that watches my segments regularly, you'll know I'm a bit of a perma bear on the pound. And Russia, the Russian embassy, has just put out a tweet that I found quite amusing. Yeah, this is not market related, by the way. I just thought it was funny. So basically saying that Russia doesn't pose any threat to the UK, which is cool. but it's the UK government that needs these fabrications to avoid dealing with the country's real social and economic problems. So even Russia sees the problems, but it seems the UK government doesn't. So we'll be looking. I'll be looking to continue shorting the pound when the time comes. The problem is the edge finder seems to be very bullish, which, you know, the markets reflect that, so I'm not going to try and fight it. But right now, I think the pound is very overvalued. I just don't see any appeal in it, to be quite honest with you. So I will be looking to short, possibly pound Australian. We do have a little bit of rate divergence there with the Bank of England cutting rates this year, and the RBA having a hawkish cut and projected to hold rates. So we could have quite a nice short here as if we see market developments or economic developments there. Roshan, I'm good. How are you? James said M1 too advanced. Even Nick was overloaded. Oh, I've got no idea. can't do the A1. No, A1. I can't do the M1. It's way too fast paced for me. Silver still in silver longs. It looks fine. So currently in a bit of drawdown. I've got 3 positions in drawdown, 1 position in profit because I've averaged my way into this trade. But the overall structure remains intact. The edge finder has actually changed from being bullish. It went from very bullish. It's now neutral on silver, but I'm still very long-term bullish. I think even if the trade doesn't work out as quickly as I'd like, I'm happy to sort of reposition a little bit into a longer-term trade. So I'd be looking to hold silver for maybe the next 6 months, maybe even a year, depending how it goes. Swiss yen still short, looking to hold this one again for sort of 12 to 18 months. Euro yen, looking to take profits on this one at 150. I'm just waiting to see if we can finally get the break of this support. This support's been respected. Actually, it's not that long, is it? Hold on, let me just go onto the weekly here. So when was this? Yeah, it was only September last year, so that one's not too relevant. But this one on Swiss yen's been active since since August 2023, when it started being used as resistance and then turned into a support level. So just waiting for these major levels of structure to get broken to the downside on these yen pairs, and I'll be a very happy guy. Euro Australian still short in this one again, sort of averaging my way into a short position. I think the euro is still fundamentally very bearish. The ECB continues to be on a rate cutting cycle, and the RBA, I mean, I already mentioned the RBA did a hawkish cut previously, looking to hold rates. Euro CAD, we took this one this morning, so I won't go into that one too much. Obviously, it was for the Discord guys. CAD yen also looks like a great short. I'm actually just going to move you guys down here, so I don't have to keep looking over there. So yeah, CAD yen seems like a great trade. It's definitely on my watch list. The problem is, as I just mentioned, is a lot of these yen crosses are stuck at a pretty major support level. It's essentially across all the major yen crosses anyway. And because I'm already exposed to Swiss yen and Euro yen, I don't want to start selling more yen pairs at this level, just in case we do see some sort of larger pullback. Obviously, that would just put me in unnecessary drawdown. So I'm waiting to see either a large rejection, and that would, again, it would allow me to scale in at a better price or a higher price, or we wait to see a break and retest, and then I would be entering on this retest here. So we'll see, but taking it slow. I don't want to get, this sort of trade idea is only just formed really, so I'm not rushing to get into it just yet. James, I know you don't trade Bitcoin. Just took a short trade on BTC with a small lot size and up a little bit. With your fresh set of eyes, would you give it a look? I will. I can give you the technical look, but again, I don't pay attention to what's going on with Bitcoin on a sort of fundamental view. I suppose there's 2 ways you could look at this really. So option 1 is we are going to come down and correct this sort of impulsive move, whatever you want to call this is fine, but this move on the left side, generally I quite like to see those get filled. So you could look for something like this, just a very simple pullback continuation, or you could look at it from sort of a momentum point of view and say, okay, well, it's now pulled back into a fib level. It's rejected 618. Maybe I'll look to buy. Again, it's not something I trade, so the behavior of Bitcoin is something I'm not very familiar with. So I wouldn't be taking either of these trades. And with the way it's moving, given the momentum, given the break of this really strong support level that's, it's been held up for 3-4 months now, I think downside continuation is very likely at this point. Trump election move, that's right, yeah. If we did reach this support level, I would very happily start buying some more Bitcoin. I've not bought any in a while. And when I say I don't trade Bitcoin, trading it and sort of buying it, in my view, are two different things. I don't actively trade it, but I do invest in it. Not much, just a little bit. If I've got some spare change, I'll put some into Bitcoin, just leave it there to run. But I would quite happily put more in if we can start showing some sort of respect at these levels. Buy low, as they say. You're a full-time trader, James. I don't really like that term because I don't think a full-time trader actually exists, really. But I guess you kind of could class it like that. I mean, I own Elite Traders as well, so it's almost similar to the A1 trading Discord with some slight changes. So that obviously gives me money. And yes, I do trade as well. It's very rare to find a trader that just trades. I mean, you could look at the best traders in the world in terms of the retail. So like Anton Creel, for example, was an institutional trader, very wealthy guy, very good trader. Even he runs mentorships. So there's that. Yeah, so we had US news today. I'm actually just going to pull it up. I think I closed it earlier. Give me a second. So we had GDP, we had unemployment, and we had, what else was there? I can't remember. Oh, that's the A1. That's the wrong calendar. Hold on. Any Forex factory, that's the calendar I'm looking for. So yeah, GDP, unemployment, and yeah, that was it, wasn't it? Oh, it's the Trump speech. The Trump speech is what I was going to talk about. So GDP stayed the same quarter on quarter, which isn't great, but it's not necessarily bad. We had unemployment tick to the upside, which is pretty poor, but the redeeming factor is the Trump speech. So essentially what we're going to have is tariffs. I think it was January, February, March 4th, I think was when the date he gave for Canada and Mexico. He's also confirmed 25% tariffs in Europe as well. He sounds like he ruled out the UK. So he's also increasing China tariffs by 10%. So all the tariffs he sort of spoke about are now in motion, which is a big supporter for the US dollar at the moment. And it's going to be a big, big weight on the euro, the CAD, and the Mexican peso. So actually, if we look at the dollar CAD, I was looking to buy dollar CAD, and unfortunately, I missed it. And I'm really upset. So I was looking to enter basically at the low. So when we broke out of this range, I was looking to enter around here. Never did it. I was way too hesitant. It was a bit too aggressive for my liking. But then obviously looking for some sort of retracement, which we've not got. So sad, but I think if there is some way to get into dollar CAD, maybe on the next pullback, it would be a good trade to possibly hold back into the highs when we first had the talks of tariffs in January the 31st. Check Euro Swiss. Okay. Oh, that looks a bit messy. Euro Swiss. I'll be honest, I am actually more on the bullish side on Euro Swiss long term. Short term, maybe not so much. The ECB again is cutting rates. Swiss National Bank is holding rates for now. But again, long term, I would expect them to go down to neutral rates. So I think if you would be willing to hold a trade for 12 months, maybe this will be a good one to get long. Short term, I've got absolutely no interest. So to be honest, I would be more looking for something along these lines, I think. Obviously, this is a very wide trade. This isn't a signal. Obviously, I don't do financial advice. It's just sort of visually thinking, I guess you could call it. Yeah, I think this might be a good idea, actually. As the Swiss start to decrease rates or reduce rates, cut rates, whatever. Although we just had tariffs on Europe. Yeah, I'll be honest. I just don't see much. I think, again, long term, maybe a long position is if we can see the Eurozone data start to pick up. But right now, again, with the tariffs that have just been applied in Europe and the pretty negative sentiment around the Swiss, I'm just not seeing anything. Either your technical analysis is off or it's not going alongside the fundamentals. Is that to me, ball out? I'm not sure. I know there's a separate conversation going on here. Yeah, I've got no idea what's going on here. Seems like you guys are having a conversation of your own, which is fine. So I'll just keep doing my thing. Let's have a look at the Edge Finder. So gold, actually, I'm just going to refresh it after the news today. So gold, yeah, gold's kind of dropped off, really. It was very bullish along with silver. Silver's now neutral. Gold's lowered down to a 6. Pound crosses very bullish. Well, bullish. So it seems like sort of a European favor, apart from the euro, ironically. So we've got the pound, we've got the DAX and the FTSE bullish. We've got yen crosses and euro pound bearish. So even the pound is reading bullish on euro pound shorts. I actually think euro pound might be the only situation I'd be willing to buy the pound. And we've now broken support, which I do quite like. So I would be looking actually to sell euro pound at some point. It might, yeah, it's a little bit unfortunate because I think I've missed the opportunity, really. So again, for anyone that's watched my segments for a while, you will know, or you will remember me shorting this whole move. And I think Nick shorted it with me, actually. I didn't ask if Nick's still in this position or if he cut it. But I was selling this whole move and the drawdown got pretty bad, actually. It worked out in the end. But in hindsight, really should have held that trade. I was a bit silly to cut it, really. And now I think I'm going to have to wait for the next bullish run on this. Because it's... yeah, just a little bit oversold for me right now. Roshen, I appreciate it. I'm not sure exactly how long until I move. I've done my taxes. I've got one call to make regarding taxes, and then it's done. And then after that, I've got full focus to do the visa stuff. So it should be, if it all goes smoothly, there's no problems. It should be February, March. End of March, start of April, maybe. Problem is I can't spend more than 180 days in the UK, so I've got to get it done quick. So for anyone that is thinking about moving away and traveling and stuff, the 180 days is kind of your golden line in the sand, really, because if you spend, I think it varies actually depending on where you are, but generally, if you spend 180 days in a certain place, you become a tax resident, or at risk of becoming a tax resident. So obviously I don't want to have to pay tax in the UK, then pay tax again in Indonesia. Anyway, that's all boring stuff. Nick normally rolls his SL. Bashi, yeah, he does, but he took the same approach I did in terms of DCA on that one, on Euro Pound. But again, I'm not sure what his result was actually on that one. James, what's the RSI? Do you mean the RSI settings? So I use a length, a length of 6, upper band of 80, lower band of 20. So this just gives the, most extreme situations in the market. Really, it's kind of like the best settings I've found to be, or the most accurate settings I've found. RSI or MSI? Don't think we ever used an MSI. So RSI in my view. are using digital nomad visa. I'm not sure what visa it is actually. I've got an agency doing it all for me. I think it's a 833 visa or an EE. I can't remember. It's some sort of digital visa, but it's for 1 year, but it can be bridged up to 3 years, I think. So I'm just going to do it on a rolling year basis. I'll be paying tax in Indonesia, Logan, and the US. So double taxation is fun. I love it. Dollar Swiss is coming back, which is good, but it's a bit frustrating because I was I closed out of dollar card for a pretty hefty loss the other day, so I was a bit upset about that one. Silver continues its range, which again is very frustrating. It's been in a range for the past 2 days, pretty nasty. Yen pairs also just stuck in a range. Euro Australian is not doing anything. Pound CAD's not doing anything. So at the moment, portfolio is very boring. There's nothing going on. Ball out, I pay US tax because my company Elite Trades is registered in New Mexico. Yeah, no problem, Lee. Obviously, that's not tax advice, but that's just my situation. So feel free to do your own research. Pound US dollar. Yeah, I mean, I don't see any saving grace for the pound dollar at the moment. I think the pound's had its run. It's had some, a relief rally or whatever you want to call it, but against the US dollar dominance that, to be honest, might be slightly reestablished now, especially with tariffs in place, we might see the pound dollar continue to fall. And 1.2 actually didn't get hit, which was a big target, and it might still be. I've not seen much about 1.2 recently, but if I need to do some more research this weekend. If I still am very bearish on the pound dollar, I might look to go short into 1.2. The daily looks great. If we can have a daily bearish close like this, I think I will probably go in light with a small position and just see how it goes. The H1, it looks like a very strong news reaction, actually, so it wouldn't surprise me if we do pull back up. But yeah, overall, I would still look to go short rather than anything else. If it's an LLC, then it's pass through. What do you mean pass through, ball out? I'm not sure. Yeah, it's a single member LLC. So I've filed taxes. So I've had to pay state and federal tax. I'm getting tax credit for my UK taxes this year as well. Why is JPY pairs up again? Your guess is as good as mine. I would assume because dollar up, yen down. That's generally the relationship we see within the dollar and the yen. It's sort of just general capital flow rules. We see risk on. Sorry, not risk on. That's not the right word. We see appetite within the dollar. Normally, we see less appetite within the yen, and vice versa. Obviously, the euro's down because of obviously the tariffs and the US dollar strength. So, sort of just general market. I wouldn't look into it too much just yet. There's nothing that's happened within the yen itself. Although we do have, is it CPI tonight? Let me just double check. I know we've got some yen news coming out. Hold on, Forex Factory isn't updating. Yeah, here we go. So we've got Tokyo core CPI, industrial production, retail sales for the yen. So that will be, if you're in yen positions, pay attention. RSI and MACD are a good combo. I used to use the MACD a lot. It used to be like a core part of my strategy, but I kind of just stopped using it over time. It was many years ago. Looks like CAD JPY is loading for a move lower. It wouldn't surprise me. I think all of the yen pairs are ready to drop. It's just a matter of time. Do you think the dollar is going to get strong on tariffs? Even US heat map is turning red. I'm not ready to say that I'm bullish on the dollar just yet. I think the tariffs obviously is an initial reaction, but tariffs are also inflationary. Yeah. Unemployment also ticked up, so no, I'm not ready to start being super bullish on the dollar. I've been neutral / bullish for the past maybe week or 2 weeks, but I'm not ready to go heavy long just yet. Yeah, it would be good to see an increase in CPI. If we can have a nice tick up in CPI for the yen tonight, that would be maybe the catalyst for the yen to break support, but we will see. Pull up yen on Edge Finder. Okay. Yeah, the M1 is, yeah, not for me. The thing is, I think it obviously can work. I think I'm not saying this to discredit you, Bashi, in any way, but I think one of the things within trading such a low time frame is you can afford to be very wrong, because if you're trading the 1 minute, even a move on the, a one candle on the H4 or the H1 can be a huge move on the M1. So those runs really make up for the losses. So you can catch high R&R trades that can really offset the losses. And I remember Bashi saying he had a pretty low win rate as well, which would make sense with that. So obviously R&R and win rate go hand in hand. They normally offset each other. The higher the win rate, the lower the R&R, and vice versa. Fallout's laughing at the M1. It's over. I'm listening to the stream on speaker. My GF asked, who's that handsome voice? Cedric, send her my way, my friend. Although, wait, no, actually scratch that. No, I've got a girlfriend. just in case for some reason my girlfriend watches this. I'm joking. I'm a man of morals. James caught slipping. It's just instincts. It slipped out, Bashi. It slipped out. It's my bad. Don't blame me. I'm joking. I'm not like that. Anyway, let's get back on topic. The US dollar. Let me just change this. Let's put it back onto candles. The big thing really with the markets at the moment, we've got a few things. So the US dollar, for me, yeah, I'm gonna say in the short run for the dollar, in my view, to be able to run higher, it's gonna have to break back above. What zone is this? This is let's just call it 107 just to be easy. So it's gonna have to break through this 107 level. So we need to see it break, retest, continue. That would be a criteria where I'd say, okay, the dollar might have some steam again. If that doesn't happen and we reject this resistance and continue down, fine, dollar lower. The yen, for the yen to be short-term bullish, in my view, we're going to have to create a higher low, because what we don't want to see is the yen start to respect previous levels of resistance. So I mean, it's very clearly retested this previous resistance. If we now just come and drop back down, it's going to be bad news. We're going to have to do some repositioning. So let's just look for a higher CPI in Japan tonight, see if we can break this resistance and hold above. And then I think we're pretty much swimming in money at that point. We can just hold yen longs and we can be happy about it. Okay, I'll do a gold forecast in a second. I'm not moving to Thailand by myself. Moving to Indonesia by myself, leaving my girlfriend behind. Although she's going to South Korea with all them K-pop guys and leaving me behind. So it's fair game, really, isn't it? Okay, let's look at gold. Oh, wow, gold is really dropping. Has silver had the same move? Yeah, it has. Unfortunate. Yeah, I mean, I was looking to potentially buy gold off the support, but not sure about that just yet. I'm still bullish. Definitely not sitting in a bearish camp just yet. But what gives me a little bit of the spooks is the daily and the weekly. The weekly's got a pretty strong bearish candle forming. The daily looks pretty bearish, but when I'm saying bearish, I'm not saying bearish trend. I'm just saying it looks like we might be heading slightly lower. So to be honest, we've got a level here that would actually line up with this Bollinger quite nicely. The daily's coming into a relatively oversold level as well, or we could come sort of into this level here. Either way, I'll be looking to buy at some point if we can come and get a nice little pullback. I don't really see a reason that the gold should be necessarily changing trends. I mean, we've got clarity now on tariffs that I guess removes some of the uncertainty. So that's a bit of a downside, actually. James, you've yet to have a stream stalker or offer marriage from a death row inmate. Actually, I had a stream stalker yesterday. I had to mute him on my channel, though. He wasn't a good stream stalker. He wasn't supportive. Sammy, I'm not buying here. Yeah. I might buy gold if we fail to hold below this support. If we can see a strong wick from here to the upside, that would be a pretty good case to buy gold from a technical view. Again, I'm not going to be the guy trying to sell this. I mean, look at that. If you panicked and said gold's melting every time and you took shorts every time you saw a few bearish candles, you would have been losing for the past, for the past 12 months, really. So yeah, that's why I'm still looking to buy, even though we're clearly heading lower at this point. Looks like a good time to buy gold. Maybe, Jack, if that's what your if that's what your strategy is telling you. For me, it's a little bit early, I think. I'm already in silver. So to get into gold, I'd need a very strong confirmation. Do you like the black and white color scheme in your charts? Do you like the black and white color scheme on charts? What is Edgefinder with these colors? What do you mean, Bitcoin? I change my chart colors, every couple of weeks, really. I like to keep it fresh. It's only a healthy correction. Lee, I completely agree. Although, like I said, tariffs are confirmed now, so it's a little bit of the uncertainty driven away from gold, which is not great, but it was bound to happen at some point. So we'll see some profit taking, I would assume, now. Yeah, the equities are down as well. DAX is taking a bit of a hit, actually, as well, which is good. I'd quite like to buy DAX. I still like the narrative for higher DAX at the moment. NASDAQ down, FTSE slightly down. Dow Jones is doing okay, actually. We've got the S&P also down, but the S&P is not a surprise. We are still stuck in this horrible sideways range. So until we break out of there, I'm completely uninterested. James, what to expect this summer, PA-wise? But I don't know. We'll see. The only thing I would really expect into the rest of the year is yen strength. Euro, I would like to say could strengthen, but it's not looking good, to be honest. I think when we can start buying euro dollar, and we might have missed it, being completely truthful. I doubt it, but the possibility is there that euro dollar doesn't really move much lower than this. The projections so far that I've seen is still parity, but much later into the year, sort of the second half of this year. But I would still really like to start stacking on some small positions, but to the upside once we start breaking past parity. So we will see, but that's basically all I've got for you in terms of long-term stuff. Oh, and silver higher, maybe. You'll teach me waves. It's a game changer. Yeah, sure. I don't know. I've never really seen waves put into action. A crash is happening, feels reluctant. No, I wouldn't say it's a crash. I think crash is a very extreme word to use. It's had a huge run. I mean, look at this. It's up basically 50% since last year. And it's now moved, let's just measure this. It's now moved almost 3%. So yeah, I'm definitely not willing to call this a crash just yet. I think that's a very pessimistic way to look at it. New Zealand dollar. Where is New Zealand dollar? Here we go. Yeah, it's really taken a hit actually, hasn't it? Interesting. I mean, surely you don't need me to tell you this is bearish. I've been looking to sell New Zealand dollar for a while. No, I just haven't managed to get into it, actually. It's one of the, unfortunately, one of the trades I've missed over the past few months, but I'd still be happy to go short if I get an opportunity to. Although I'm just slowing down really at the minute on the dollar bullish narrative. I've got focuses in other places, but I think it does still remain bearish. Yeah, that's true. I've not seen Frank in a long time on here. Unemployment seems to be favoring the dollar. Cube, it's not unemployment that favors the dollar. If anything, unemployment's having a little drag on the dollar because it ticked to the upside. The dollar's benefiting because we've just had tariffs confirmed. So 10% extra tariffs on China. We've had tariffs on Canada, Mexico, and 25% in Europe as well. Okay. Actually, let's have a look at oil. I was very briefly long oil and got humiliated pretty quickly, actually, on oil longs. It seems to be hanging off this sort of support here, though. It's not in a position to buy just yet, I don't think. Maybe we can get I don't know. The thing is, Trump's now obviously confirmed tariffs. Is he now going to go on his next rampage of oil? Who knows? Maybe. If he does, I don't want to be involved in oil for a while. Might go short, but definitely not long. James is enjoying the chat. Yeah, it's quite entertaining to sit here and just read some of the stuff you guys say. I've said it before, but it feels like when you're on someone else's phone and you look at like a group chat or something. It's not uncommon you guys having a conversation that I just have no idea what you're talking about. Yeah, ball out. Reach out whenever you want. I'm an easy guy to get in contact with. Outlook on yen charts. We've already done the yen, but I remain bullish. I don't really have a reason to not be bullish on the yen. We do have CPI later, actually tonight. Go over the sunset in Thailand. Yeah, I can't wait. We price should go up, James. Oh, oil price should go up. What makes you say that, Jack? What is going on with people in comment section today? It's like Facebook comment section. I suppose that's also a way you could say it. It's good though, trust me. A slow or a boring live stream chat is awful. You just sit trying to talk to yourself. Yeah, I'm not actually going to Thailand this time. So I'm moving to Indonesia first, then maybe Thailand after. Nobody. I am 26, 27 pretty soon. Jack, if they're producing more oil, that sends the supply up, reducing the demand. So that would be bearish for oil. Thinking of scooping up some Tesla. I think you've got Chris Pulver on after this that can give you, let's just have a look. Yes, so it's me. You've got me for another 15 minutes. Then you've got the guy that you can talk to about stocks, Chris Pulver. Unfortunately, you know, you're better off asking your dad about stocks, or you know, someone else. Can't give you much insight there. How do you handle a losing streak? I will be very frustrated. I might just relax for a bit, go and do something completely different, then come back the next day, do the same thing over and over. There's nothing you can do. You know, you either be an idiot, start overtrading, start doing silly things. And to be honest, I think something I've started to realize is most of the people that have bad trading habits, like revenge trading, over trading, things like that, they're normally the ones that really enjoy trading. They're the ones that love to look at charts. They do it as a hobby. They live and breathe trading. And I'll be perfectly honest, that's not healthy. That's not how you should approach trading. Trading should just be a business. You know, you clock in, you clock out, and that's it. So, for example, when I lose a trade, fine, lost a bit of capital, no problem. I'll come back the next day, get back to work. But yeah, it's just a mindset shift, really, and a different approach. But it's not something you can really learn because it's all psychological. Only you can do it. At this moment, I think finding directional bias for USD is difficult. It is. That's why I'm not really bothered about the US dollar. I'm happy to just really sit out of it. James, did you find a broker? Yes, I spoke to my broker. Actually, I can. Frustrated. I'm going to have to move back to CFDs, really, because CFDs aren't offered in Indonesia, apparently. But I've got a good relationship with my broker. So as long as I keep a certain structure, then I can just move back to my CFD broker. And I can trade like that. But payouts are going to be difficult because although I'm trying to cut ties with the UK, I'm also then going to have to pay capital gains tax in the UK. So unfortunately, it's not a win-win situation like I was hoping. You are allowed to enjoy your job. Of course, you're allowed to enjoy your job. If you didn't enjoy your job, why do it? But there's a difference between enjoying your job and being unhealthily obsessed with your job. It's like, you know, you wouldn't go to a 9 to 5, do your job, come home, keep looking at work emails, look at the work you've done, look at all the work you need to do tomorrow, and go way above and beyond. I know some people do, but that's stupid in my opinion. But with trading, obviously, the more you sort of do that, the more open to emotion you are. Because don't forget, the way I view trading, it is gambling. There is no, as far as I'm concerned, you can't say trading isn't gambling. And at a certain point, if you think about it in the wrong way, you approach it in the wrong way, you will start to get the same dopamine fires, you will get the same emotional reactions and the same sort of addiction thing. So that's what I'm trying to explain. James, can you briefly go how to read pips? What do you mean how to read pips? You would just do it like you do with everything else. Get the measurement tool and see how many pips there are. I love trading and looking at charts. Yeah, so do I. I love trading. I love looking at charts. If I didn't love it, I wouldn't do it. But I know where to stop. You know, if I'm done for the day, the markets are slowing down, the sessions are done, fine. My trading day's done. There's no volume. I'm not going to trade. Whereas some people will they'll sit on the charts all day, all night, looking for setups, because it's not just that they enjoy it; they're basically addicted. Bitcoin, that's exactly it. Yeah. Do you think the Nasdaq has more room to drop? Yes. I mean, you know, theoretically, it could drop to zero. I mean, I'm not saying that will happen, obviously, but I think if this support doesn't hold, then likely, yes, we are coming lower to where. Couldn't tell you, unfortunately, but that's a really bad arrow. But yeah, I think if we don't see the support hold, we see a break lower, then yes, likely we will see Nasdaq come to some lows. How many trades per week? What do you mean, how many trades per week? How many trades do I take a week? It can vary. It could be 10, it could be 1, it could be none. Like this week, I've taken 2, and that's it. Can I look at GA? I can look at GA. Yeah, so I'm still, for now, still pretty bullish on the Australian dollar. I'm a pretty much a perma bear on the pound as well. So I would be quite happy actually to get into a mean reversion trade on this one. The weekly is coming up to a really nice resistance level. I would view this as a little bit overbought, a little bit overextended. The RSI is overbought on the daily, really pushing up this Bollinger daily resistance. So yeah, just a small mean reversion back into maybe just 1.99. I think is reasonable. So maybe tomorrow or next week, I might start positioning to do that. I just want to let the market settle after today's news. I've been studying for 3 years now. I'm starting to get it. It feels good to be true. Stop doubting myself. It's weird doubting because I'm starting to be profitable. Well, you're going to have that until you prove to yourself that you're profitable over a long period of time. You will continue to doubt yourself. As long as that doesn't change in your approach, it's fine. What's happening in market's quite volatile. QBuy, I already told you this one. I think I actually told you specifically as well. We just had tariffs confirmed. We had tariffs confirmed on Europe yesterday. We've just had tariffs confirmed on Canada and Mexico. Tariffs on China are being increased by 10%. We've just had higher unemployment by the US as well. So yeah, the markets are moving quite a lot at the moment. Do I have an account for capital gains? No, because I don't have capital gains. I spread bet, which in the UK is classed as gambling. But my accountant looks over everything anyway. So if I do have capital gains, then he can sort that for me. The moment I open a position, I feel the same emotions that I felt when I was playing poker with fake money. How do I stop it? I would argue obsession with trading is an advantage, given you maintain discipline on a demo. Again, obsession, addiction, where do you draw the line? Because don't forget, at the end of the day, this is a job. You're in a business. So yes, being passionate, loving it, enjoying it, researching it is great. But again, just don't fall into that addiction thing. As for stop feeling emotions, I think that's more of just time. I don't think there's anything I can tell you to stop that, unfortunately. Every trader starts out with some sort of emotional trading problems, unless you're a psychopath. Did you have Financial Juice subscription? No. You don't need a Financial Juice subscription. You get everything anyway. It just gives you some ads. I don't really care about ads. Jack, that is a good point. When you make a sale or you get some money, you will feel good. But of course, you know, you can't run down the street asking everyone to buy something just because you already had one sale. It's like you can't go run into the markets looking for more money because you already made one good trade. And I know that, you know, it's probably not been very useful for me to say that there's not much I can tell you about emotions because, you know, I probably could, but I've got, you know, like 5 minutes left. And it's a very complex and in-depth. It goes more into the realm of psychology rather than trading. And there's very little that anyone could actually tell you because, again, it's in your head. I'm not a psychologist. I don't have the tactics to be able to, you know, brainwash you into into sort of abiding by rules and things. Good to know. I've been looking to take withdrawals after I build my account up. Yeah, Ryan, if you're in the UK, I'm 90% sure, and this isn't tax advice, check with your accountant or a professional, but I'm 90% sure funded accounts aren't capital gains because it's not your capital to gain on. It's more just, it'd be like a contractor's salary or a contractor payment or a freelance payment or something. It's not capital gains. Because again, you don't have capital in that funded account to be gaining on. You know, it's fake money at the end of the day. It's almost like prize money. I mean, it won't fall under that, but kind of is, in my opinion. Where do you see all interest rate projection? I use a third-party software that I won't mention here, but if you want to get in contact with me, I can tell you in private. And that's not me trying to gatekeep, by the way. I've just, I don't want to promote other services on this stream. Prop firms are prize money. I think, you know, if we go into technicalities, I think it is prize money. But again, will the taxman see it that way? Maybe not. But I think, yeah, I don't see how they could view it as capital gains because it really isn't capital gains. Again, I would say it's more like if you went into a contracting job or if you went freelance, that would be it because it's not a salary. You won't get that payment every month. So it's not a salary or income or like regular income. Yeah. But again, consult a professional. I'm just thinking out loud. I don't know. I'm not a funded trader. Yen's moving down, boys or girls, boys and girls, and everything in between. Actually, Euro Yen is moving down, which is nice. Maybe we can get a break here. Again, we do have CPI later tonight for the yen, so that might be the final push we need, which would be perfecto. Silver really tested my patience. There is absolutely nothing I can do on silver. I cannot do anything more other than just wait, and this has been disgusting. Mass, no, it's not free. It's pretty expensive actually, which is another reason I'm not going to promote it here. It's like Bloomberg Terminal, but for retail traders. Yeah, no problem, Ryan. Again, like I said, I've said it a few times, but just to repeat myself so I don't put you at risk or me, please get an accountant and check with them, because what I said I think is right, but obviously I'm not licensed or legally allowed to say anything like that in terms of advice. What broker do I use? Right now I'm using IG Markets spread betting, but for CFD I use Blueberry Markets. I identify as a doji candle. You know what's weird? I kind of get it actually. I might just start referring to my moods as candlesticks. I'm feeling like a bullish engulfing candle today. Quite like that. Oh, Jack, you use IG too? Very nice. I think IG is the best option really for UK traders. Anyway, guys, I've got just a few minutes left. So if there is any actual questions, please let me know. If not, I'm quite happy to sit here and we can keep chatting. But obviously, I want to give everyone a fair chance because this is a trading stream at the end of the day. Tasty FX. Is that the... Yeah, I know what you mean, actually. Yeah, Tasty in the US is IG. Yeah, you're right. Chris Pulver uses Tasty, I think. It's a weird name for a trading platform, actually. I feel like the candlestick that formed when Trump spoke about oil. Yeah, I relate. Hi, James. Silver still showing bullish? No, it's not. Silver's gone to neutral now. Here. Gold's still bullish. Silver, not so much. It's still leaning on bullish with a score of 2, but overall it's neutral, which it's sad. Retail's like almost 100% long as well, which again, it's a bit sad, but yeah, what can you do? I want to move brokers. Alan, oh, you're in the US, Alan, aren't you? I don't know what options you've got. The only thing I know about is Webull, actually, in Oanda, but that's from Nick, so I'm sure he's probably more used than I am in that situation. Okay, cool. Oh, it's funny you guys are talking about saw someone AUD USD. Okay, anyway, sorry. I think I hear ball out 88 doing pre-flight checks on his helicopter before he departs. Is ball out like some secret billionaire in the chat that we just haven't heard about? Wouldn't surprise me. If there are any secret billionaires hiding in the backgrounds of the chat, please get in contact with me. I'd like some extra money to trade with. Really enjoy Oanda, but I'm restricted to spot FX. Venture more into commodities. Yeah, that's the downside. I would very happily have a business account actually with a broker in the US, but obviously I primarily trade G10 currency pairs and commodities here and there, which it doesn't really work in the US. Excuse me, at least not as well as it does in Europe. Fallout might lend capital if I stop using support and resistance. That's fine. I'll call it supply and demand then. My code is the secret billionaire. It will train Tesla robots to trade. Interesting. Okay. Euro yen's pulled back. Of course it has. And absolutely nothing going on. Oh, nothing else going on. So I would be paying attention. If you are trading the US markets, pay attention to the range on the S&P. Once we have a break either way, it wouldn't surprise me if we continue to run that way for a little while. I would maybe lean towards the downside, and that's just because the Federal Reserve rate cuts is kind of slowing down. I think later this year we'll get a rate cut, but it's definitely not anytime soon. Which obviously does it's a little bit of a downer on the US side of things. Yeah, I like this chat. I enjoy coming on these streams. There's always something interesting to talk about. Thoughts on oil? I'll be honest, I don't really know, to be honest. I don't have a reason to buy it, to be, I would expect this to just be a natural pullback. It seems a little bit, I mean, this sell-off has been very aggressive. So it wouldn't surprise me if you see a little bit of a pullback here and then a continuation down into support. Then maybe down towards $65 to $62 a barrel, maybe. But again, I'm not really an oil trader. That's about all I've got. And that's just going off sort of instinct. Hey, James, what do you think will be the catalyst for the yen to finally make the break? I think more confirmations on rate cuts, path to normalization would be sort of the cherry on top. I mean, we've basically got that, but just another layer on top would be the cherry, really. So yeah, CPI tonight would be a great one as well. Fundamentals feels like gambling. Cube is exactly the opposite. It's completely the opposite. Fundamentals are what move the markets. It's what decides the long-term trends. You can forecast it. You can build a model around fundamentals, whereas technicals literally is just hoping it works. I mean, trading is gambling, as I said, in my opinion. I think it is just pure outright gambling. But if you are going to have more of a structured approach and you want to have like an edge, if you will, then fundamentals is the way to go. Crypto Surfer, I'm still bullish on gold, just not as much as I was. Anyway, guys, Chris Pulver is here to take over the show, so don't leave when I leave, because you'll be in good hands with him. Guys, have a good one. I'll see you very soon. I think I'm on tomorrow as well. So don't get margin called. Enjoy the rest of your days and speak soon.
Hey everybody, thanks for tuning in to today's A1 trading session. We love engaging with our audience, talking shop, taking requests, and sharing our favorite setups. It's about that time where we're going to review a bunch of indexes, stocks, currencies, gold, silver, Bitcoin, and pretty much anything else and share our insights. If you're wondering what trades I'm in, if you're wondering what trades I'm taking, and you'd like to see exactly how I'm trading everything, you can actually follow my trading signals. If that sounds like something you're interested in, we'll share a link in the chat. You can sign up. You can sign up directly with the link or speak to a support rep if you have any questions. If you're asking, what do I trade? Pretty much everything. Indexes, ETFs, stocks, options, futures, Forex, and crypto. Thoughtful analysis, active trading. Check it out. And now, back to the show. What's happening, everybody? Happy post-NVIDIA day. Markets pretty much saw NVIDIA do what it does best, which is beat estimates. Yet, not really convincing push this morning. We had an aggressive fade on futures. We also saw, I took a screenshot of this morning before trading. We have some reinforcement of tariffs coming into play. So Mexico, Canada tariffs on March 4th. Okay, fine. Also, China also to be charged an additional 10% tariffs that date, April 2nd. Reciprocal tariff date remains in full force. So more tariff talk overnight. We came right back down to retest previous lows for the week, previous lows from the 3rd of February. And the market is trying to decide whether or not it can hold, which I think right now technically is in a pretty interesting spot. I would say decent spot. I actually closed this thing out for a profit. That trade's done, that trade's done, that trade's done. So there's a pretty large gap here, right? Pretty large gap here between 59.20 and around 58.50. So if we're going to pull into that gap, I mean, I think this is the market trying to find some efficiency. That's a pretty large gap from previous CPI data, if I'm not mistaken. That would have been a CPI day where the market, I think, did the exact opposite of what it probably should have done, but we went up and tested highs anyway, and then we just been just nothing but chop fest the entire time. So look, I think you got to be careful. You know, I mean, this area to me seems like we can still come back and fill this gap. I think this is a critically important level for the bulls. If we hold above 58.25, that's great. That would show that we're still, more interested in buying the dip. Where's that dip? Fill that gap or maybe test this low. So between 58.40 and I'd say 57.70, we want to see the bulls kind of step in. Now, I've been planning on a trade like this for a while. We're trading around the 100 moving average on pretty much every major S&P level. So here's SPX right at the 100 moving average, bouncing there. Here is XSP, which is the kind of mini version or the micro version of that. Here's the SPY trading again at the 100 moving average. Now, I've talked about this for the last 2 months. I'm ready for price to come back and find this 200 moving average. The hard part is it never feels good. right? It never feels good. So high to low, a little bit of consolidation around the 100 period. Look, if the 100 period holds and it goes back up, okay, fine. I still think this bar count is out there needing to get hit. So if we have a high, low, and a bunch of chop right here, do not be surprised if the market sells off more. We're wrapping up the month this week on Friday. It's going to be end of February, kicking off a new March. I don't know what March has in store for us. I would imagine if we're going to get out of this slump, it's going to have to be probably through May, June, July, when the market maybe picks up some seasonal trends. Okay, so just be on the lookout for high to low, a little bit of consolidation. If the bears take control again, or the bulls just can't do anything that just get this market to change directionally, then if it's a bear flag, then we're probably coming to fill that gap. Like I said, come back into the deeper moving averages, and that's where things get a little nastier, right? If we've got tariffs in effect March 4th, it's like that's the first week of trading. We'll see if the market wants to price in something bad, right? So, but for right now, I mean, we're seeing a pretty big flipperoo on the day. We had a immediate. This is a lot of volatility, by the way. I was trading this morning. I mean, that is a big change on the day. Now, I don't know if this is going to be any type of direction, if this is a bunch of noise where we have a high for the day, low for the day, or if this is the market using this as a bouncing point. You know, we may use this as a bouncing point, and if that's the case, that's totally fine. I've had quite the P&L today. I was up 10 grand, then I was down 10 grand. Now I'm flat at $300. It's going to be a wild P&L swing one way or the other. I'm still hedged. I'm still watching, all my levels closely. If I do get to the 200 moving averages on SPY or SPX, I am hedged on MES and ES. And I took off some of the Japanese yen stuff. So my hedge plays are still in the works in case we do have more downside. Upside is easy. Downside is what I need protection on, which is what I have. And I just have to be patient to see how it plays out. But this is a pretty silly game for the morning. I mean, right out of the gates from opening bell, we gapped higher. Market dropped 75 points within about 20 minutes. And we're back up about 55 points. I mean, we've had 120 points of movement in less than an hour. That's a lot of movement, for what is normally pretty calm, pretty chill. And yeah, it's just been one of those markets. These last 4 or 5 days of trading have been much more challenging as far as like intraday trading. I do put in some positions intraday on the indexes, and it's been like a lot of grinding to essentially just scrape and claw. And I mean, I took some losses over the last few days because it's doing something that's atypical. But I'm upside down about $50 in the last like 4 or 5 days, which is fine because I've taken over like $1,000 in losses. So I have recovered nicely. I'm just surviving, which is fine. And then when conditions get back to a little bit more normal, then all will be well. So all right, anyway. So that's where we're at, right? Either this is a bear flag in the making, so high, low, little bear flag that's setting up around that 100 moving average. If we drop lower, I'm just telling you, like, don't be surprised. This bar count has been set up for quite a while. We're creeping up well over 300 bars. If I go to I think I have a, workspace in here dedicated to that specifically. Let me go into layout. Bar count. There we go. So there's my bar count at 329 bars. So my SPY bar count, all I care about is the 200 moving average. Okay, 329 bars. If I go to SPX, 329 bars. XSP, 329 bars. E-mini futures, 330 bars. Micro E-mini, 330 bars. Same feed, right? NASDAQ, this one shows 332. Okay, how about the Dow? 329. See what I'm saying? Like all these, to me, are the more important, like kind of technical setup. The technical setup is this market's going to struggle to make highs until we find some equilibrium. To me, this is the unfortunate equilibrium. Like I'm excited to do something on the Dow, but I want to see price come back and find that bar count first, right? So this is why starting this year I wasn't super bullish on the market. This is why this year I was also watching to see, okay, well, we might poke highs, but if we get to highs, 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 and stretch further and further away, that was going to turn me into being short. So what I did instead is I took my hedge positions at these recent all-time highs. I'm looking to see if I'm going to get paid on those over the next 30 to 60 days. Right. So that's big picture stuff. Just watching, prices dancing around between the 50 and the 100 moving average. We'll see who takes control. I mean, obviously the market can do whatever it wants to do. It can still be bullish here. Maybe it doesn't hit the bar count right away. But I think between this 50 and 100, if we stay inside of here, there's a lot of chop. But when we get a breakout one way or the other, I would almost think that it's almost better if you want to be like proper positioning for the year. It's almost better to let the market just get it over with. Like let the market cleanse, get the tariff stuff, price all the crappy stuff in, and then figure out where we can get a decent bottom. But nobody likes that because how good has trading felt the last 3, 4, 5 days when everything's down, right? Gold turned down, Bitcoin's down, indexers are down, Mag 7, momentum stocks are down, Palantir's down 30, 40%. Right? Like it doesn't feel good when you've got like crazy swift turns and a lot of volatility, and it feels like nothing is good, right? The only thing that's been working out fairly nicely would be TLT's going slightly higher. So we poke 92. Let me see where I'm at on this one. I might end up closing this out if I get mostly full profit here. I've got to be close to full profit, but it's not quite there yet. So TLT, I've got a diagonal spread. 65 by 92 would be $27 max profit. And right now it is trading around 24.50. I'm going to let it run. It's still like another kind of hedge. Well, okay, I'm going to let it run. So this week, I'll fill out my updates for Pulver Alerts. Intel is probably my best trade and winner this week. Intel closed out shares for $3.95 a share, closed out a diagonal for about $2 credit. That was a nice little win this week on Intel. I've had winners on IBIT, Costco, SMH was a winner, Intel is a winner, Japanese Yen Futures winner, Microsoft winner, JD.com, which is a bit of China play. I did end up rolling some calls, but I needed to stay above $39, now above $40. So I rolled it out and up. And so now my covered call is $40, brings my cost down to $35.92, get it called away for $4.08 with 1,500 shares. That's a nice little chunk of profit. Baba is sideways after that ridiculous surge. I'm in a way, I'm kind of happy that I'm out of this one. I just have a bunch of option trades that'll come to full expiration for profit. I'll let that run happen. Baidu still sideways. I see a catch-up trade in Baidu. If we're down here into these lows, I'd love to see this end up getting another push higher. I'd be taking profit here in like the 116. I'm not trying to be too greedy on this stuff. Okay, Dennis says this must be a recording I'm watching. Nope. I'm a robot. It's always automatic. No, we're live, dude. FXI, fine. KWeb, fine. JD, above my 40. That's where I need it to stay. Now, I've sacrificed a couple of bucks. Like obviously it's at 42.68. I was looking to maybe try, and I could still do this. If price has earnings next week on the 5th, if price goes higher, I can always roll this out another week and just get more credit. So, I mean, I can give it more time. I'll keep the $40 strike, but if I can get an extra 20, 30, 40 cents and I'll roll it out another week. And I still add to my bottom lines. Let's say I get an extra, whatever, 25 cents. Well, if it's 25 cents for another week of time, 25 cents, that's an extra $375 for waiting a week. I don't mind doing that. Now, yes, I'm sacrificing some upside potential. I'm tying up some buying power, but it's income. I can just roll it, give myself some more time. It's fine. If I can roll it up a strike, it's going to depend. I'd probably have to roll it out further in time, up a strike, and then increase the bottom line. But at this point, it's done what I needed to do. I just hope we stay above $40. SCHD, still like this one a lot. SCHG, staying out of this one. Here's what I'm going to stay out of. SCHG, probably the Russell Growth, which is IWX, I believe. IWX, nope, IWY. IWX is value. IWY is growth. I will consider this one if we find some good balance like the 200 moving average, but I think the IWX is a better position. This is for the top 200 value plays. There's clearly a bit of a rotation into defensives. If you look at sector performance so far this year, sector performance year to date, It's not your typical bull market, right? Healthcare is our best performing sector right now. Financials, best performing sector right now, right? Index itself is pretty much flat for the year. We had some big movements with thanks to Meta and Netflix earlier on, giving us some gains here, but a lot of stocks have turned hard. Like Netflix has turned off the top, Meta's turned pretty hard off the top. Mag 7 is down as a whole, right? So mags are down. This is another one that will be interesting. Do we find support here at the 144 to 200 moving average? How aggressive is this market's rotation out of Mag 7? Okay. And I would say this, if we go high to low and we find this 200, rather than guessing at this bottom, I think what I'm going to look for is something like this where we test and go green. So if we go red below and then green back above, I might look at trading this back up towards these highs. I mean, I think that's kind of a broader positioning. Most likely, I would hope this is far less volatility than trading the individual stocks on Mag 7, but with far less volatility also comes like lower returns. I mean, right now I had a dollar cost average position on Tesla that just got filled. So my 285 position has been taken in. I did allocate another $1,500 towards Tesla at 285. So this one, fortunately, this was profitable. So this one is done for profit. That was last week. This one is out to March with a potential assignment at 255. I'm still, $40 above that right now, which is fine. I think it's still safe for the income side. Would I take some assignment on Tesla? Yes. I think for a 30-day expiration, you can get like $20 to $30 of credit on a 30-day expiration for a covered call at the money. So it's an easy one to repair, similar to what I'm doing on MicroStrategy and a few other stocks as well. But this one is done. So this one is, say, expired, full profit. So that one hit full profit. This one is still out to March. And we'll look to see how this market's going to play out. Berkshire Hathaway just off the highs. TLT still pushing higher. I do like this area. I mean, if we're going to see a slide in the equities market, the nice thing is we're finally starting to see the broken correlation, which is good. We don't want a positive correlation between stocks and bonds, right? So it shows like that whole idea of like the traditional 60-40 portfolio. If equities are sliding, bonds should pick up the slack. That's the idea of balanced portfolio. I'm not a big subscriber of having 60-40 at all. In fact, I prefer more of like, if I want to keep it really simple, I like 60 in stocks. Let me just type this out. So I like 60%. Actually, I kind of like this 50% stocks, 25% gold, silver, Bitcoin. Well, not even that. I will probably say this. Maybe 50% options with no ownership, 25% stocks, ownership, and options to lower costs and collect premiums, and then 25% gold, silver, Bitcoin, and miscellaneous, whatever else you want to sprinkle in there. But this is kind of the way I trade. Most of what I'm doing is just trading a lot of options with little to no ownership. When I do own stocks, like right now, I do have some shares. If I go through the list here, what do I have shares of? I have shares of Apple. I have shares of Amazon. I have shares of Alibaba. I have shares of Baidu. I have shares of BITO. I have shares of what else here? Dell, I took that trade recently. I have shares of FXY, which is the Japanese yen ETF. Anyway, I mean, I have some ownership, but if you look at this list of top to bottom, there might be 5 or 6 owned stocks. The rest is just a lot of options, a lot of income, spread it out, take mechanical, systematic trades, and let it do its thing. Okay, so that's kind of my portfolio mix. All right, let's keep going top down. So we've got bonds up, stocks are still sliding. I wouldn't be surprised if the market continues to slide a little bit lower. I think this is a much needed, necessary correction. I also believe that this is a healthier bull market. If this market can come down, okay, if it comes down, I think this is a healthier bull market, okay, or a better timed bull market, as opposed to the market just won't crack, won't crack, won't crack, won't crack, won't crack, won't crack. Eventually, that scares me more, because we either blow the top off for a bubble and then we crash later, or this does something like this. It just rolls over. That's my concern, is that this whole thing is just going to be a giant top that won't really break. It won't really get off line. But when it does, there's no stopping it. There's no floor. So I'd almost rather see this market find some support, give the bulls a chance to come back in, try to grind all year and get back to positive territory. If we're down, let's say we have like a 10% pullback for the year. If that 10% pullback can offer up a positive 5 or 10% yearly gain, if you time that well enough, that's where your upside is for the entire year. That's one of my big positioning plans for 2025. I've got to look at least taking some nibbles here at some good levels that are at a discount. If I get what I want technically, that would set me up for hopefully a nice run into the end of the year. Okay. All right. Let's go gold, silver, oil. Here's dollar index. Finding support around that 106 handle like we talked about, 106, 10600, 10550. Dollar index finding some support. Currency strength for the day. Dollar getting a big surge. Wow. That's a big jump at 8:35 in the morning. What do we have this morning? We had GDP numbers only, right? So unemployment claims slightly higher. Durable goods, GDP index came in as expected at 2.3. Okay, more Fed speakers, G20s going on for the last couple of days. It just seems like a big move right out of 8:30 for whatever reason. I don't know why the dollar's getting bid outside of technically, we're coming down to that support level. Is this a full-on dollar trend? I don't think so. I think this is going to be a big range. I think we're going to be more range bound in the dollar. Oil. Let me take a look here. It's not quite at the technical levels I would like. I'll just set a chart alarm. 67. Let's go 67.30. Okay, we hit 67.30 or futures wise. Let me move this up a little bit as well. Let's move this up into like 67.30 as well. 67.30. So if we find some recent lows, I'm probably going to look at just a bullish spread on oil. Natural gas, just off the highs. I'm still doing a diagonal spread in this one. This trade's looking pretty good, but I'm going to see if I can get it called away at 23. Gold is down, fine, great. I want it to be down. I want to be positioning for gold here. So either a retest, previous resistance becomes support, or pulling back even deeper. So like I said, probably taking some nibbles on gold. This area, looking at some credit spreads or debit spreads on gold and take it out, 6 to 12 months. I would probably take one trade here, and then at like the 100 to 144 area, another trade, and then below the 200, another trade. These would all probably be 6 to 12 month trades of just taking a little stab at gold. No assignment risk. I do it most likely on GLD or GC trade some gold futures. Depends on the contracts if I can go out far enough. But I'm going to wait. I like this pullback. I want to see the pullback on gold. I want to see it on gold futures. We've got a lot of dynamic support. This is another one. If I go to the bar count, here's gold. Gold bar count at 354 bars. Not only is it 354 bars since the last time we tested this 200 moving average, but we have quite the bit of distance between this and this. This is why I think gold is going to make a pullback into here, and letting this moving average catch up a little bit. So if we go high, low, lower, high, lower, low, would love to scoop up some more gold. Do I have any plays on options? If that question's for me, yes, I've got some trades on Nvidia. Nothing about the earnings really affected my positions though. All I had were some cash secured puts and some ratio spreads. So right now, if I go to, I'll just show my Nvidia positions here. There's a bunch. I have some shares of Nvidia. that are collared. So that collar is a, let me check on just individual account. So they're covered at 135 with a protected put at 115. I also have a ratio spread, which is the 115 by 110. I have a bunch of ratio spreads out here, like the 70 by 75. I've got some cash secured puts, 70 and 75s. So a lot of it's this. My combo NVIDIA is $75 and $70 sell puts, just straight up cash secured puts, where I take some ownership. Ratio spread, the 115 by 110. If we stay above 115 or 110 by March or April, it's a nice little income trade. And then I own some shares, which I think right now I have 300 shares total, maybe 400 shares total, maybe more. 1, 2, 3. I've got 500 shares total, and they're all covered with a collar trade. So it's either getting called away around the 130, 135 area, or it's protected down to 115. If we see a big dump to like 100, then I'll turn that 115 put into profit or some cost protection, and then I'll just rework it. So those are my plays on NVIDIA. It's kind of out of the way. OXY got called away. That was actually a nice gain last week. I got it called away at $50, and I'm glad that I did, just because I think I had 2,000 shares of OXY. Got it called away for like $2 or $3 credit, net credit. Like I worked through it with a couple of option trades. It was a repair trade, but it worked out okay. All right, makes sense. More calls than puts. Yeah, I'm not. I'm mostly just selling puts. Selling puts, ratio spreads. I'm not long calls. I did a debit spread. I did like the 126 by 130, 126 by 132, and I was looking for that gap fill, and I got that trade. That filled pretty nicely. So this was a max profit of $4, and I closed it out for like $3.50. Max profit of $6. I closed it out for like $5.50. So it took most of the profit on that gap fill, and I was happy with that. Okay. Let's see here. I'm going to take a quick peek at something on SPX for today. Flip this around. Intraday high around 6,000. $60.15. So do we break highs and lows today? $60.20. Where the lows at 59. I'm gonna sneak in this trade for a couple of bucks. Maybe not though. I don't feel I've been kind of I've been tested all week for the last like 4 days in a row. Just like intraday trading has been so aggressive. Just a lot of direction. I mean, now it looks like, yeah, prices had a high low. If we kind of stay sideways for the morning, this is a pretty good opportunity to see like, okay, if price just stays pretty calm, you can sell above, sell below. But if price gets more directional, it's just going to threaten. So I'll probably just stay out. And I think probably today is a good day to just comb through the portfolio. All right, let's keep going. So we did gold, left off on gold. Let's get silver. Let's get some Bitcoin in there. Any big volatility plays? Nothing right now. Volatility is slightly elevated, but we didn't see any type of crazy spike through the 20s to 30s. It just kind of stopped around 21. Prices are still, testing weekly lows. Dollar again catching a bit off that 106 handle. Oil, I'll look for my chart alarms to see if I can get a debit spread going. It's going to be a bullish debit spread in oil. Let's see if that floor will hold around $67. Gold, we just did. I want the pullback. We're at 354 bars on gold, so I'm looking for more of a pullback into that 200 moving average. Silver's okay. I still think silver is very well supported at 29 and extremely well supported around the 26 handle. I'd like to see silver do something like this. If this is a structure move where we're just coming back to accumulate some more silver, I'd like to see that over the next like 3 to 6 months. I'd like to see silver up into $36 if possible. Bitcoin came down to the 200 moving average and tested 2 spots. We've talked about this pretty consistently for this week. If we're back above 91,000, that's probably a good sign of relief for the bulls. If we are still breaking and pausing and breaking and pausing, last level would be 74 to 75K. So do we get a previous resistance to become support? If you're looking to really time this move, that's a good spot to get long or at least allocate something, which I'm going to. I'll probably put in some more trades on IBIT, maybe add into my wallets as well. All right. But once we're back above the right side of this trend line, I think Bitcoin again could just be a big range trade. It could also have a, correction that plays out, sits here for a while in bases, gets on the right hand side of the trend line, then we start to go back up. Bitcoin is going to be tied to risk appetite. If the markets are sliding, Bitcoin's going to be sliding. If the markets are ripping, Bitcoin can come back and rip as well. I don't see Bitcoin going up without the markets. I don't see the markets going up without Bitcoin. I don't see the markets going down without taking Bitcoin with it. It's like they are correlated, whether you want to admit it or not. I don't care how many Bitcoin maximalists you have out there. I don't care how bullish Michael Saylor is. They are tied to the global markets. And if we don't see broader bull markets, we're not going to see broader bullish Bitcoin. Just my opinion. Here's MicroStrategy just trading down here at the 200 moving average, 250 to 200, some pretty strong bounce levels there. This is another one that has a lot of volatility. So if we do get an aggressive bounce, I still have a call on this one at 310 out to May. I am willing to sacrifice some of the upside. I've got a collar trade on, so it's protected to the downside if I need it. But break even is 263 on this position for me. Coinbase at 217, just through the 200 moving average. I do have some income trades on here. I will also consider taking some ownership of Coinbase if I have to. I don't want to necessarily, but if I did or had to, then I will take the assignment, take the ownership. Break even's 188. Get anywhere between $20 and $30 on a 30-day covered call, and repair the trade for hopefully a couple $1,000. Ethereum, nothing good until we break that trend line. Copper, looking better. This 111 trade on copper is looking good for income. Right now, my copper position is, I guess I need more time in the trade. This one's out to April. So I went out about 50, 60 days on copper. So this one should be good for about, I don't know. It's like going to be like a $1,100 position when it's all said and done. If it stays above 4.18, then I'll make some money on copper. Japanese yen futures, I close this one out. I will revisit this trade later this year in case this is going to start building something like this. Does it come back in for a right shoulder? Does it come back in for a range equal low? If we came back down to revisit this level, I'm getting long Japanese yen again. So this trade worked out just fine. I took a stab at it. I got most of the profit. No, not most of the profit. I got about half the profit that I wanted in way less time though. So because it is time sensitive with the futures contract, I just closed out for the win. But if Japanese yen goes through this level, then I'm looking at FXY to be the reason I'm still holding. I want to see if we can get to higher highs in FXY. Nikkei. So I saw that Warren Buffett, Q3, Q4 net seller of stocks, making a pretty big play on Japan. I do wonder what that is. I don't know if that's individual companies in Japan. I don't know if that is the Nikkei. I don't know, but I do think that there is. You're seeing some hedge fund money that is going to non-U.S. trades. Hedge fund money is in China. Hedge fund money is in Europe. Hedge fund money is non-U.S. It's a rotation out of what is arguably overvalued. So I do think that this pullback in the U.S. markets is needed and necessary. And we'll see how those dips get bought up. But I do wonder if the Nikkei could just get out of its own way and stop being like a broken market after that July to August swing. So this is a lot of chop. That's a really sloppy position. So I trade it this way. If we go up from here, that's fine. Okay. If we break the highs, there might be some momentum there. This could be just a really ugly swing. If we come back down, I still like the Nikkei, basing off of that August bottom and then having a good opportunity to buy back up. That should be like a 25 to 30% rip. If we come back from this level and get all the way back to those recent all-time highs, that's a 36% gain in Japan. So I would be okay positioning for that. If I can get long the Nikkei there, come back up to those highs, could you get excited about a 30% rip on the S&P or the NASDAQ right now? I don't think so. But China, yes. Europe, yes. Nikkei, if it's technically there, I think that sets up for a pretty good trade, right? it's hard to know that we can still have like 5, 10, 15, 20% years in the S&P and the NASDAQ without what goes into like a bubble territory. If we don't hit the 200 moving average, okay, right here, if we don't hit this 200 moving average within the next probably 3 to 6 months, I am not bullish towards the end of the year. So like I said, if this is high low, another flush coming through March, find support, then we can revisit this buying opportunity. But otherwise, like if this just stays sideways, grind. Like I said, this either is a big rounded top and this thing ultimately ends up crumbling, or we have what most equity markets will do, especially in the US, is they will look like they're going to top out and the market blows the top off, and that becomes the bubble that when it bursts, this is where we're talking about 20 to 30 to worst case, maybe like even not worst case, anything would be worst case, but big fat bubble corrections. And that would be highly unpleasant. But I would be ready for that and be sitting in a crap ton of cash, not overexposed, and certainly not heavily invested if we're going into like bubble territory. All right, makes sense? Okay, so interesting stuff on Buffett with Japan. What else we have? DAX. Kind of fumbling around with these all-time highs. I'd still like to see some dynamic support on the DAX. FEZ, I put in some leaps. I did some basically long-term leaps, not buy calls. I don't like to do leaps that way. I like to just sell puts and do it out for a year. So I collected I don't know, $3 or $4 of income on this one, and I'll let it play out. But this is a pretty inexpensive way to trade the European index. FTSE hanging in there. Argentina sideways. If we get a pullback towards the 144 to 200 moving average, I like that a lot. China is still above the September highs. EWZ is Brazil. Mags watching closely. Let me set a chart alarm on this actually. See if I can set an indicator chart alarm and see if that gets tested. Apple is down off of earnings highs. Amazon bouncing off that 144 moving average. I still like Amazon quite a bit. Let me see what so that's a 200 by 195. Let me look at an April trade here since the IV should be a little bit higher. Amazon's 35.3. Let me see what I can look at for like a 111 trade. Maybe in like the one. Man, I don't know what I'm going to get for the prices, but if I can get like the 180s to 170s on Amazon, let me see what I can price this one out to be. So let's look at a April 17 or May expiration. So if I were to buy the 190, not bad. Or just a ratio spread. 190 is not terrible. That's about a 15 delta. Let me see what this looks like from like a 180 to 190 to 185. That's an 11 delta. Now I have a 93% chance of profit. I get about $1 credit on this one. Would I own some shares of Amazon? Yes. What do I get for a 30-day covered call on Amazon? If I was in the shares, I go out 29 days. I get about $6 to $7 for an at-the-money call. That's a pretty easy way to repair it. If I own the shares, went out to April 17, own the shares, 185 minus 5 minus 97. So I'd own this around like 179. So 185 assignment minus 5 minus the 97 cents. I'd own it at 179. From these recent highs, 179 would be around a 26% discount. It's not bad. What might be nice would be maybe throwing in like a leap, going out to like January 2026 and just throwing a leap at like 150. You know, that's a pretty strong technical level. That'd be a monster decline if we came all the way back down to that level. That'd be a 38% discount on Amazon for one of the world's largest retailers. I still think this dynamic support is there. So, all right, let me take a look. April for income. May might be a little bit better. Usually in May, we've got a pretty good rally as well. So let me see what May looks like. Now I could do a 180 to 175. That's a little bit better. I'm going to take this trade for May. 145. That's so 180 by 175 ratio spread. Chance of assignment is pretty slim. maybe a 10% chance of assignment. I'm getting about $3.70 a day on time decay. It's still a positive delta trade, but I'm also way out of the money. So loss wise, like I'm going to manage the trade. I would take the assignment. I'd own the shares at like 169. So I'm going to take this trade for $1.40 or so. I've got plenty of buying power. I like the stock. It's been beat up a little bit. I'm going to position this for May, and also look out. I'm going to do like a December, January leap. I'm just going to sell a put. So let's do this on 1, 2, 3 accounts, 4 accounts. I'll do it on these 4 accounts right here. Actually, yeah, that's okay. I'll do it on those accounts. So 140. See if I can get $1.40 on this one. I'll try the mid price at $1.41. Mid price is $1.43. Let me try it. So here, $1.43 not filling, $1.42, $1.41. Come on, $1.40 fill. Let's go. Annoying. Fill for $1.39. Okay, so that trade got filled. Got filled. Filled. And one more here. Filled. All right, trades in, adding it to the tracker. I'll add this one to Pulver Alerts. That is a 5/16 expiration. Buy the 180 put, sell the 175 put. There's 2 contracts on that sell put, so it's a ratio spread, and collected a $1.39 credit. Willing to own, and I'd be willing to own Amazon. The break even of ownership would be 175 minus 5 minus $1.39, 168.61. Okay, so that's in. Another one for Amazon would be, if I go out to December, the 150 strike. I mean, it's kind of like the way out of the money. 150. Would I own some shares at 150? My answer to that would be yes. Previous resistance. I mean, there should be some pretty strong support here at the 190 handle. This is previous resistance around 2021 before we had like the tech crash and deleveraging in 2021. So I mean, if there's good resistance becoming support, that like 190 to 180 handle should offer a pretty good bounce. Plus, trend wise, pretty solid trend off the 200 moving average, getting some good support. So 150. I mean, that was our July to August crash last year. I'll take that. That's an income trade. Maybe do another ratio spread here. Yep. So I can still get $2 and change and have a $5 bonus on top of that to own it even cheaper. So I'm going to do a 150 by 155 for December. And that would be 150 would be assignment minus 5 minus 2.35 or whatever I get filled at. So another one for 142.65 and take on some shares. All right. So same accounts are going to get some love on this one. $2.37 or hopefully $2.35 would be the fill. 237 got filled. $237, $236, $236. Okay. And try one more. Nope, that just ties up too much capital. All right, I'm going to keep it on the margin accounts. So this one is AMZN. That is a December 19 expiration. Buy the 155 put, sell the 150 put with 2 contracts, and then collect $2.37, 236 credit. Willing to own, and that ownership would be 150. Oh, I just had it 150 minus 5 minus 2.36, 142.64. Okay, so that trades in. All right, I'm going to get those both in for pulver alerts for stocks. All right, Google, just dollar cost averaging right now. I've got some income trades into Google below the September low. So March, May, and even December. I would also take some ownership of Google at a pretty heavy discount. That'd be down here like 150, 140 area. Meta, got a broken wing butterfly that expires on Friday. So tomorrow, Microsoft doing some dollar cost averaging, also have some income trades. This one's full profit. This one's out to March and March for another $3.60. Netflix took the profit on that broken wing. Netflix, I want to see a pullback, another high bar count here. Netflix hasn't hit the bar since 339 bars. Meta is ridiculous, 518 bars on Meta. Yowza. So I think we still have a reasonable correction coming on Meta. That's when the Mag 7 is just going to get weighed hard. It's going to be a fight for Mag 7. It's going to be a big rotation out of Mag 7. That was the thought going into 2025 this year anyway. And because there's such large companies and such a high concentration, that is also why the market is struggling to go higher. So this technically, even though the market is sliding lower, it is a broadening. You know, everyone thinks about the broadening out as like, oh, the 493 stocks have to step up and perform. Well, the reality is you can just leave 7 stocks and let 493 stocks that suck less. And the market is going to broaden out, and you'll see how that rotation plays out. So anyway, I just think we have bar counts that have to get hit. So took some profit on that recent top on Netflix. Took a looking at a profit here on Meta. Nvidia still, I mean, selling. Look again, big news this week, and what's Nvidia doing? Selling off. I think the scary part about Nvidia would be if we break this trend line. You know, I don't know if it's necessarily a safe trade, but I would say that this August bottom right here, like that level would be pretty solid support, and the recent highs would be resistance. I think the one thing that would frustrate traders would be that Nvidia just doesn't go gangbusters higher, right? So if we come back down to the same low at the 200 moving average, we might just bounce around here, bounce around here. Now this, believe it or not, would actually look pretty bullish for Nvidia, right? If we're holding the lows, making equal highs, I mean, eventually when Nvidia breaks that high, like it's off and running. But if that doesn't happen and we end up taking out this low, then you're going to want to look left and see, does this level hold as support? You know, I think this $100 level would be fair market value. I'm going to put FMV for fair market value. So this is where I did my ratio spreads. This is where I'm putting my puts around the $75 to $80 zone. Because I think, look, I would take some ownership of Nvidia. I mean, fundamentally, the thing makes a ton of cash, has a ton of cash on hand, is still in high demand. I know the threat of DeepSeek is potentially there, but I don't know. I mean, all this stuff, it's like when you dissect the DeepSeek a little bit more, it's like it just means that you can make Nvidia chips cheaper, or there's going to be higher demand for them if they make them cheaper. So I don't know. I don't think it's a stock that's dead in the water, but I do want to be cautious of picking stocks this year, especially if the market's going to rotate away from growth and away from momentum. I don't want to be stuck holding the bag on stocks that are going to drop, 30, 40, 50%. That's going to feel like garbage. Okay. All right. Anything else? Tesla sliding lower. I think there's a good level here around like the 250 handle if Tesla just gets its act together. Otherwise, just waiting for Tesla on the right hand side of the trend line is probably the better play. Bonds are fine. We did. Mortgages would be nice to see them come down a little bit. We haven't seen a new print on that for a while, but 10-year yield is sliding a reasonable amount. We went about 60 basis points from the recent highs. So it's probably not going to be fully reflected, but around this level. So when yields are up here, we had about a 7% 30-year mortgage. Now they dropped about 60 basis points. So it'd be nice to see like a 6.4 to 6.5. I don't know if that's going to be real or not, but it'd feel nice versus down here was 6%. So we're probably just still operating in the 30-year mortgages around like 6 to 7%. I'm in this market where in April I'm closing on a home. Timing is of the essence, and so maybe I can do a little buy down, try to get it as close to 6 as possible, which I absolutely hate, but it's certainly better than 7. And if we have deeper pushes lower in rates, then refi is fine. But it's budgetable. It's just annoying, and I'll just be aggressive on payments and principal. But I'm watching that closely, and futures were good. Junk bonds still showing that there's a lot of liquidity in the market. I think what we are possibly seeing out is a shakeout of Mag 7 and a little shakeout of the retail investor. I think that, look, I think smart money is still accumulating. If it wasn't the case and this was going into like a scary market, JNK would be dropping. Anytime we've seen, difficult cycles in the market, this is pretty much all of 2022. Bear market and what's happening to JNK, it is going down consistently, right? But it has been making higher highs and higher lows. We haven't had really any major scare outside of, I think that was like the deep sea scare. But that's it. This still remains pretty tight. Like AAA, BBB, CCC credit spreads are, I don't know, they're tight until they're not. But I think that still shows that there's a good liquidity in the markets. There's no like real panic out there, but that can change, and something you got to be mindful of. China, really quickly before we go, I walked through those earlier. Some other stocks. Costco, I got to play in Costco this week. That expires Friday. I've got a broke wing butterfly. This one's probably going to be good for the full $1.15. Walmart still has some shares. It's collared. Nike, nice comeback. I've got $65 and $60 puts. Home Depot hanging out that 200 moving average. Lowe's, same thing. MasterCard, Visa. I put a trade in on Amex this week. For April, May, I did a ratio spread on Amex, looking for some income. Johnson & Johnson, ripping off those levels. I got a 140 put. PGR up to all-time highs again. I wish I just bought the shares. That would have been a sweet little trade right off that 200 moving average. But I got income on the ratio spread down here. It was like a $2 credit or something. CB is out here to May for another couple dollars. Palantir, this is the run from growth and momentum, right? Stock's down about 31%. Is Palantir good to buy it again? Yes, no, maybe. I'm not going to touch it. This is the stuff I'm trying to stay away from this year. If it comes down to like 40 or 50 bucks, maybe. I'm not that interested. Carvana, same thing. This thing's down 20 to 30%. Not going to touch it. It's down 30%. This was a trade this week in Salesforce, all eyes on NVIDIA. What was NVIDIA's move, by the way? I expected about a $13 move. And from high to low, it's down about $8 right now. So we got about an $8 move on NVIDIA. There could be some follow through, but I was only expecting about a $13 move from one way or the other with the NVIDIA earnings. So that still kind of keeps things relatively tight. Maybe higher lows, maybe lower highs, and it's just going to be a wait and see. So, all right, I'll wrap it up here for today. Any questions? I know we went through a lot of stuff. We talked some currencies. We talked gold, silver, Bitcoin. Talked a lot of stocks. Talked a lot of options. But biggest takeaway for me is if anybody puts a 200 moving average on your chart, it's a 200 exponential moving average. Anything that you see that has a bar count of greater than 300. Okay, greater than 300. Now, if it's on an individual stock, sometimes stocks will go a little bit longer. They can get up to the 400 and 500s, but on an index, 300 plus is a long stretch away move and a percentage away. So not just the time away, but also the percentage away. That is why I'm not super, super, super bullish on the markets this year. Not until we have that rebalancing. So anything I've got, Netflix has a high bar count, Meta, gold, the Dow, all the S&P instruments, the NASDAQ, all of them. So that's where I'm at. And if we get some, that is why I'm also sitting in cash with about 30 to 35% of the portfolio, because if and when we get that opportunity, I want to deploy that cash. I want to deploy another decent chunk. Okay. All right. That's it. Have a good rest of the day. See you. Bye.
Thanks for watching today's A1 Trading Show. Be sure to subscribe and to turn on notifications so you don't miss the next one. Want more from A1 Trading? Check out the links in the description below or our website a1trading.com. We have lots of free trading tools and channels available for you. We hope you have a great rest of your day, and we'll see you tomorrow.